interesting study which perhaps the PMEAC will take up in coming months. But extremely interesting study, I must say.
Absolutely. Thank you so much for that, Lata. Surely, keeping an eye out on this interesting study and, how different states are doing. But on that note, we're going to take into a very short break. And when we return from the break, we'll get you all the action from the J&K Assembly elections. So don't go anywhere.
ये सिर्फ आम आदमी पार्टी में हो सकता है, अरविंद केजरीवाल जी के नेतृत्व में हो सकता है कि एक फर्स्ट टाइम पॉलिटिशियन एक राज्य की मुख्यमंत्री बने। मैं खुश हूं कि अरविंद केजरीवाल जी ने मुझ पे इतना भरोसा किया है, लेकिन जितना सुख आज मेरे मन में है, आज उससे बहुत ज़्यादा दुख भी मेरे मन में है। दुख इसलिए कि दिल्ली के लोकप्रिय मुख्यमंत्री मेरे बड़े भाई अरविंद केजरीवाल जी आज इस्तीफा दे रहे हैं। मैं आज ये ज़रूर कहना चाहती हूँ आम आदमी पार्टी के सभी विधायकों की तरफ से, दिल्ली की 2 करोड़ जनता की तरफ से, कि दिल्ली का एक ही मुख्यमंत्री है और उस मुख्यमंत्री का नाम अरविंद केजरीवाल है। भारतीय जनता पार्टी ने पिछले 2 साल से अरविंद केजरीवाल जी को परेशान करने की, उनके खिलाफ षड्यंत्र रचने की कोई कसर नहीं छोड़ी। अगर अरविंद केजरीवाल जी की जगह कोई और मुख्यमंत्री होता, कोई और नेता होता, तो वो 2 मिनट नहीं सोचता मुख्यमंत्री की कुर्सी पे बैठने के बारे में। लेकिन अरविंद केजरीवाल जी ने वो किया जो आज तक इस देश का इतिहास तो छोड़िए, शायद दुनिया के इतिहास में किसी नेता ने ना किया हो। उन्होंने कहा कि मेरे लिए सिर्फ सुप्रीम कोर्ट का फैसला काफी नहीं है, मैं जनता की अदालत में जाऊंगा। जब दिल्ली की जनता मुझे कहेगी कि हम तुम्हें मुख्यमंत्री के रूप में देखना चाहते हैं, जब दिल्ली की जनता कहेगी कि तुम ईमानदार हो, तब मैं मुख्यमंत्री की कुर्सी पे बैठूंगा। मुझे नहीं लगता कि हमें लोकतंत्र के इतिहास में ऐसा कोई त्याग का उदाहरण मिलेगा जो आज अरविंद केजरीवाल जी ने देश के सामने रखा है। दिल्ली भर में लोग बहुत दुखी हैं अरविंद केजरीवाल जी के इस्तीफे से। तो आज सभी दिल्ली वाले ये प्रण ले रहे हैं, सभी दिल्ली वाले इतने गुस्सा हैं भारतीय जनता।
Back with us here on Business Lunch, continuing to cool off from the highs of the day is the Nifty, now below the mark of 25,400, almost 100 points shaved off in the last 20 minutes. And you can see the extent of the sell-off there. You can see 100 points gone from the highs of the day of the Nifty. And pull up Reliance Industries as well. That is one of the key contributors to the index downside. That too has cooled off substantially from the highs of the day. And one of the top contributors to the index downside now is Reliance Industries. Was up near the highest point of the day, but now has cooled off 0.3% lower on Reliance Industries, almost 30 rupees shaved off from that as well. But moving on then to polls in Jammu and Kashmir, where 24 constituencies across 7 districts are voting for the first time in a decade. And these are the first assembly elections in the region since the abrogation of Article 370 in August of 2019. News 18's Ishan Wani is joining in to tell us more.
Polling for the first phase of J&K Assembly elections is on, and around 26% of vote percentage has been recorded till 11 a.m. this morning. This is the Kulgam Assembly constituency where a key battle is unfolding between CPIM's Mohammad Yusuf, who has been a legislator from this particular constituency for several years, and now the new political entrant in the face of Sayyar Ahmed Rishi, who is a Jamaat-backed independent candidate. Now, Jamaat Islami has entered politics after around 30 years, and they are trying to win big in these particular elections. Whether or not that happens or not, one has to wait and see, because now the released AIP leader, Engineer Rashid, an MP from Baramulla, has also thrown his weight behind independent candidates from Jamaat Islami. But Mohammad Yusuf has been one of the key players in this particular constituency. But yes, we have seen here with time the lines and queues are increasing of voters, and this would mean that there will be an overall increase in the number of votes shared by the evening. But yes, there is a Congress and National Conference, a part of of an alliance, and PDP is also trying their luck. Several important candidates like Iltija Mufti, daughter of Mehbooba Mufti. You also have candidates like Justice retired Hassan Masoodi, the former MP from Srinagar. You also have candidates like Ghulam Ahmed Mir, who is an AICC member, and others also. Their seats are going to polls today. In Jammu, you have Sunil Sharma also in that particular zone. Then you also have Parihar brothers, whose family member has been given ticket by the BJP to contest these polls. How does the BJP perform in Kashmir? One has to wait and see. There are several BJP candidates also fielded by them, while they are also throwing weight at some independent candidates to ensure that they are in a position to form the government. Who forms the government? How does the polling remain? One has to wait and see. But for now, the voting is taking place. This brisk voting that's going on in all the constituencies.
Sure, thanks for the update there. But let's move on and get you the latest update from West Asia. At least 9 people have been killed and nearly 3,000 wounded after pagers used by Hezbollah members, including fighters and medics, detonated simultaneously in Lebanon. CNBC's Dan Murphy has more on the story.
This appears to be a sophisticated and coordinated attack, straight out of a Hollywood spy movie. What we know is that at least 9 people have been killed, almost 3,000 injured after these pagers, or beepers as they're also known, being worn by members of the militant Hezbollah group, suddenly exploded. And Hezbollah says basically it hands out these pages to its members in order to communicate with one another out of fear that normal mobile phones could be tracked and monitored. But extraordinary images captured on CCTV and shared on social media shows those devices exploding without warning and causing serious injury. Now, among those injured was Mojtaba Amani, that's Iran's ambassador to Lebanon. And in a post on X, his injuries were described as superficial. He is apparently in a good condition. But we're also seeing reports that Mohammed Mahdi, he's the son of a Hezbollah member of parliament, was killed. That's according to the state-run national news agency. Why is that important? Well, the apparent targeting of an ambassador and the death of an MP's son certainly raising the escalation risk as we see these tensions between Israel and Hezbollah continue to ratchet up as Israel's war in Gaza also rages on. What we also know is that the former CIA director, John Brennan, has told NBC News that he believes these pages has obviously some kind of explosive inside the hardware based just on the scale and simultaneous nature of the attack. But he also believes that these pages were at some point intercepted and switched before being delivered to those Hezbollah operatives. It's certainly a major security breach for Hezbollah if that's true. So, of course, the finger of blame now being pointed. Hezbollah certainly quick to blame Israel for the explosions without providing any evidence, and Israel has not claimed responsibility. And Lebanon's foreign ministry also called this an Israeli cyber attack and said it's going to submit a complaint about the detonations to the UN Security Council. So certainly a situation that raises the tensions in the region.
And with that, it's a wrap on this edition of Business Lunch. Vinny and I leave you with the market sharply off the highs of the day. But from us and the team that put this show together, thank you so much for watching. Midcap Radar takes the action forward.
से नाराज हैं और अपने बेटे, अपने भाई अरविंद केजरीवाल जी को फिर से दिल्ली का मुख्यमंत्री देखना चाहते हैं। क्यों देखना चाहते हैं दिल्ली वाले अरविंद केजरीवाल जी को फिर से मुख्यमंत्री? क्योंकि उन्होंने देखा है कि भारतीय जनता पार्टी की 22 राज्यों में सरकार है। किसी एक राज्य में भी वो फ्री बिजली, अच्छे स्कूल, अच्छे अस्पताल, मोहल्ला क्लिनिक, फ्री बस यात्रा नहीं दे पाते हैं। और एक ईमानदार अरविंद केजरीवाल है जो दिल्ली के लोगों को इतना कुछ देता है। मुझे पता है कि भारतीय जनता पार्टी अपने एलजी साहब के थ्रू दिल्ली वालों के खिलाफ षड्यंत्र रचेगी। मुझे पता है कि वो दिल्ली वालों की फ्री बिजली रोकने की कोशिश करेंगे। मुझे पता है वो दिल्ली वालों के अस्पताल में फ्री दवाइयां रोकने की कोशिश करेंगे। मुझे पता है वो मोहल्ला क्लिनिक बंद करने की कोशिश करेंगे। मुझे पता है वो सरकारी स्कूलों को खराब करने की कोशिश करेंगे। तो अगले कुछ महीने तक, जब तक ये जिम्मेदारी मेरे पास है, मैं दिल्ली के लोगों की रक्षा करने की कोशिश करूंगी और अरविंद केजरीवाल जी के मार्गदर्शन में दिल्ली की सरकार चलाऊंगी। मेरा अपने सभी कार्यकर्ताओं से, सभी विधायक साथियों से, दिल्ली के लोगों से बस एक ही अनुरोध है। आप में से कोई मुझे बधाई मत दीजिएगा, आप में से कोई मुझे माला मत पहनाइएगा, क्योंकि मेरे लिए और मुझे लगता है सभी दिल्ली वालों के लिए ये एक बहुत दुख की घड़ी है कि दिल्ली के चहेते मुख्यमंत्री को आज इस्तीफा दिया है। मैं एक बार फिर अरविंद केजरीवाल जी का धन्यवाद करती हूँ जो उन्होंने मुझ पर भरोसा दिखाया है, और मैं दिल्ली के लोगों की तरफ से फिर से एक बार ये कहूँगी कि वो जल्द ही आने वाले चुनाव के बाद अरविंद केजरीवाल जी को अपना मुख्यमंत्री देखना चाहते हैं।
Good afternoon. Welcome to Midcap Radar. I'm Sonal Bhutra. With me is Vivek Iyer. Some pressure that has set in. Nifty is down 120 points from the day's high. So ahead of the big event, usually we don't react, but maybe there's some nervousness after touching that record high levels. Banks, they continue to fight for the bulls.
Banks outperforming, what's not doing well is IT and pharma today. So some risk off, especially as far as the defensives are concerned. But quite a lot lined up on the show, some important managements. We'll start with the top headlines today. The Nifty and Sensex scaled to new highs ahead of the US Central Bank's interest rate decision today. The up move is powered by financials, even as IT stocks take a beating on likely profit-taking. Midcaps lag.
Seagull surges nearly 5% after the company becomes the lowest bidder for projects worth nearly 2,500 crore rupees.
Graphite stocks such as HEG and Graphite India surge over 9%. This rise comes after global major Resonate Graphite announces a minimum 20% global price increase on all new graphite electrode orders.
IT stocks like Persistent, Emphasis, L&T Tech Services correct between 3 to 5% ahead of the Federal Reserve's rate cut decision and a 5% decline in Accenture overnight after the company postponed promotions, raising risks on near-term visibility.
BSE rallies for the third straight session. Remember, SEBI had on Monday disposed of its proceedings against the NSE in a 2019 case pertaining to the co-location facility, citing absence of sufficient evidence. Well, welcome to Midcap Radar. It's a session where, especially in the last half hour, last 1 hour, we've seen the selling pressure intensify, especially if you look at some of the mid-cap IT names. Those are some of the names that are seeing quite a bit of selling. Look at the Nifty now trading near the day's lowest point. Mid-cap index down by 0.8%, and especially the IT names. Look at some of the mid-cap IT names like OFSS, look at Birlasoft, Emphasis. These are some of the names today that are seeing quite a bit of selling pressure, and along with that, some of the pharma companies too today taking quite a bit of the beating. Look at names like Glenmark Pharma, Biocon, some of the other names that are seeing some selling pressure. Sonal, what's on your radar?
Well, a lot of these chemical names, they are doing really well today, and this is at a time when we are not seeing any additional trigger that has come by. But still, those continue to do well, be it Neogen Chemicals, be it Alkyl Amines, Bajaj Amines. Of course, I'm sure Hormaz will have some of them on the list as well. So let's do that. Let's go across to him. Midcaps are under a lot of pressure today, so let's go to Hormaz. This is our special segment, Midcap Movers. What do you have for us today?
Most of what you just highlighted, I guess. But yes, there are some nerves that are being felt on the street over the last 30 to 45 minutes. The broader markets are facing some pressure, as is the benchmark index as well. But there are some stocks that are still holding on to the gains within the mid-cap and the small-cap universe. And BSE is one of them, 15% higher now. The stock has risen almost 80% from the lows that it made in July. That's less than 2 months, the stock is up 80%. Graphite makers, HEG Graphite are holding on, as is Angel One. But the sell-off continues in IT stocks, and it is extended from the start of the trading session Emphasis now down almost 6%. Oracle Financial at the lowest point of the day, down 8% now. Persistent, L&T Tech, every constituent of the IT index and beyond that are also trading with losses. As Sonal just mentioned, chemical stocks are the ones that are another outlying sector today. 7.5% higher for Alkyl Amines, Balaji Amines, Fine Organics, all of them having a good day at the office. Some stocks that are doing well on the back of volumes, and they will come up on your screen. They are beyond the names that we just mentioned. Samvardhana Motherson, 4.5% higher today. BKG is having a good day at the highest point of the day now, 5.5% higher on very strong volumes. And lastly, some other stocks beyond IT, and most of them are pharma names that are seeing some selling pressure. Glenmark and Abbott both down to the lowest point of the day now, down 4%. Blue Dart after yesterday's move is seeing some profit booking, and Atul too not having a good day at the office today. Back to you guys.
Thank you so much for that, Hormaz. Like you mentioned, quite a lot of the IT and pharma names are the ones that are seeing quite a bit of selling pressure. In fact, even some of the gas companies, that did very well in yesterday's trading session, in the last hour have seen quite a bit of selling pressure. Look at names like IGL, MGL and Gujarat Gas. They are seeing some selling pressure emerge, especially in the last couple of hours. But let's now slip into a short break. Up next, we will connect with the management of Galaxy Surfactants to discuss their FY25 as well as demand outlook. Stay tuned.
Welcome back. Let's get some management conversations going. Galaxy Surfactants, that is the first management on the show. The stock has surged 21% in last year. Recently, management cited that Indian demand continues to grow. Centrum has upgraded the stock to an add from a reduce with a revised target price of 3,331 rupees per share as well. This and more we'll discuss on the conversation now. We have Mr. K. Natarajan, the MD of the company, joining us now. Mr. Natarajan, good afternoon. Thank you so much for joining in. Well, you know, one of the things that Centrum mentioned in its note is that you're looking at newer categories, newer product additions. I wanted to talk to you about that right now. What are the current revenues coming in from newer products? Which are the new categories that you're tapping in? Are these high margin products, and which segment do they fall in?
Yeah, so what I had essentially even expressed during our last engagement and also during my investor call has been in terms of how the projects in pipeline with regard to our special ingredients is gaining traction with all our customers in the US and the Europe after a brief period where they're suspended due to the inflationary pressures in the geographies there, and as also due to consumers down trading. So with inflation coming down, we do see that picking up. So that's going to be something that will reflect in the S2 results. Second, also that we are looking at certain products that we will start launching, which is coming out of innovation pipeline. One of it we already launched in April in cosmetics Europe. We will have more coming in, but then they would be in line with what is the state of maturity in the innovation funnel.
Okay, Mr. Natarajan, you know, you've spoken in your earlier call about getting into the mild surfactants segment. And, you know, Centrum also has mentioned that actually it has gained quite a lot of traction from MNC clients. Can you speak about this particular segment? What is the kind of response that you've been getting from MNC, and what kind of orders are you getting from there?
So mild surfactants has been in a portfolio now for the last about 7 to 8 years. But with the recent trends, consumer trends in terms of consumers wanting and preferring milder cleansing and moisturizing formulations, we have been expanding capacities in line with the way the demand is growing and accessing newer geographies and more customers. So this is something that we service out of both our India plants and the Egypt plants. So we do see consumer trends moving towards using more and more milder formulations, and consumers are getting pretty aware about what sort of ingredients are getting used in the formulations, and that is good in terms of the way that we are seeing this market growing.
So, Mr. Natarajan, I wanted to understand, you do have around 70% capacity utilization the last time we spoke. With the newer products being added, will you be using this capacity? Is it fungible, or do you need more capacity addition for these segments?
There's some of this we've already expanded, and we have put the capacity in the last 2 to 3 years. Many of these capacities are certainly not fungible, and the capacity utilization numbers will not go up immediately because you tend to invest with a 3 to 5 year range in terms of the demand that we are planning. So they will reflect progressively. But yes, we do see some of the projects in pipelines getting matured over the next 6 to 9 months, and we will see if required whether we need to be looking at certain debottlenecking of these capacities as well.
Mr. Natarajan, you know, let's talk about the actual realization and also the EBITDA per metric ton. Now, freight costs, you know, have seen quite a bit of a rise in the last couple of quarters. Currently, how do they trend? Will you see some margin pressures because of this inflation that you're witnessing, or has it tapered down? So Q2 and rest of FY25, how do you see margins panning out?
We had said margins, we would essentially be in the guided range that we had talked about, 21,500 per metric ton that we had guided the market to. So I not want to comment specifically on what it will be for the next quarter, for this quarter. But it's suffice to say that it will be in the guided range. The other one with regard to the freight cost is that freight costs, more than cost, it's in terms of getting on-time deliveries to customers and the service levels improving. We do see over the last about 2 to 3 weeks, we are seeing some green shoots in terms of availability getting better, of containers and sailings like more predictable. But then on freight rates, we're not seeing any great reduction, although we do see some minor reductions in some sectors. But moving forward, what is critical is, you know, we need to have the certainty in terms of container availability and the sailing schedules being more certain than what it has been over the last 6 months. Probably we may have to wait for another month or so to understand whether we have a trend which says that things are improving for the better.
So what happens in this case, Mr. Natarajan, because you still have 6 months to see what happens next, and freight rates, they have been going up. Are you able to pass it on to your customers? And secondly, does it impact the import prices as well for your raw materials? How are you navigating that?
Oh yeah, so typically the freight rate increases and the service level issues impacts both incoming and outgoing. And then we obviously pass on the increased freight rates both on the incoming and the outgoing, but it happens with a lag. So which obviously is something that you cannot avoid because you can't be changing prices every week depending on how the freight rates are moving. So it always does get passed on with lag of a quarter, and as long as things get better in terms of the service levels and the freight rates remain stable, I think it's a good situation to be in. And then yes, once it starts coming down, then you need to have a secular trend of it going down, not absolutely volatile in terms of the way the freight rates move up and down. That's not good for anyone.
Understood that. Thank you so much, Mr. Natarajan, for joining us and giving us clarity on all of our questions. Let's now slip into a short break. Devan Jain from INOXGFL Group joins us next to discuss their business outlook and more. Stay tuned.
Invest.
Welcome back to Midcap Radar. Even as you speak, you're actually seeing quite a bit of divergence as far as the Nifty as well as the Bank Nifty is concerned. The Nifty is down 0.3%, while the Bank Nifty actually has gained over 1% in the session today. Along with that, select NBFCs too today are doing quite well. So names like Shriram Finance, Bajaj Finance, Bajaj Finserv, those are the ones that are doing quite well in the session today. But moving on, like we promised you, we have Devan Jain, from the INOXGFL Group. Very interestingly, the INOXGFL Group has created an IPP platform where the company has raised close to 300 crores. Along with that, the group company Inox Wind has received a letter of intent from that particular platform itself for execution of 550 megawatt wind capacity on a turnkey basis. Good afternoon, Devansh. Thank you so much for joining us. First up, discuss this particular platform to us. What was the intent behind creating this platform? Also discuss and explain to us, what is the kind of fundraise that you've done? What is the dilution that has been done? We also understand a few, very important investors have come on board with this particular fundraise.
Hi, Vivek. Yes, thank you. I think it's a new platform, a business which we are very excited about. I think what we're doing as a group, we're trying to be at the forefront of the entire mega energy transition play globally. I think this is probably one sector, the entire energy transition piece, which is going to take billions and billions, if not trillions, as we move forward. And I think given our presence and strength in that ecosystem, we are trying to capture every piece of the pie. As you know, at Inox Wind, we are amongst the top 2 wind turbine players in the country. In Inox Green, we are probably the largest and the only listed O&M player in the country. We have recently raised capital also in our EPC arm, Resco, which should get demerged and eventually listed as compliances kick in, which is amongst the top 2 EPC players in the renewable arm across the group. In Gujarat Fluoro, we're setting up one of the largest battery chemical complexes in the world. We are also in solar, green hydrogen, semicon. So with this platform, what we've really tried to do is we're trying to create more value across the group with the fact that a lot of the group companies themselves need power. And instead of investing on the balance sheet of those companies and making them capex heavy or debt heavy in terms of non-core assets, we've taken this at the promoter level, where all the debt will come in at the promoter level, given that an IPP business typically is 75-25 in terms of debt equity ratio. And all the operating companies will basically get power at a fixed price for the next 25 years, which is on par with what we've been sourcing from different CNI players in the market. It helps us because all these guys save on power cost. They get green power, which helps given that we export big time across all these entities. It creates value across the ecosystem because in all the chemical companies, we save on power cost, increase profitability.
Devansh, we get that. It's a 300 crore fundraise. So what will be the equity valuation of this particular platform? We understand, the group entity and those graphics are running on the channel as you speak. So we understand the investors have come in and they've put in close to 300 crores. So what will be the stake dilution that's happened?
So this is a single-digit dilution. Won't be able to spell out the exact numbers given this is an unlisted entity at this point.
High or low?
Let's just keep it at single-digit, yeah.
Okay, so it's a single-digit dilution that you've done, and mainly the power will be used for captive purposes, or will it be used for external purposes as well?
So, at the platform level, it's going to be 3 pieces. It's going to be it's going to be supplying captively to the group. It's also going to be supplying to a lot of other industries which want, C&I, which want power. And a lot of them have approached us as a group. Why don't you set it up and give it to us? So we're going to be supplying to third parties as well. And thirdly, we'll also be supplying a part of this power on the power exchanges, leverage the power pricing which exists for the next couple of years at least.
So Devansh, you spoke about cost savings happening for your group entities. Most of them are listed, right? So definitely the investors would want to know what kind of cost savings will they see because of this?
I
companies
think
as well, right?
Let's try and put it in the sense that typically when we're sourcing power from the grid, it's at about 50 to 60% costs, which are higher than the price at which we are being able to source this power. More than that, it's also fixed for the next 25 years, so you have no escalations. There's no risk in terms of cost of power going up. Also, it's green. I won't spell out exactly in terms of crores, but yeah, it's very substantial at the group level across all the group companies.
Versus the market rates, how much lower would this cost be? I'm just talking about percentage. Absolute terms, I know you wouldn't be able to give me an answer. How much of it will be an impact on P&L on your listed companies in terms of percentage?
Look, rather than get into percentage, what I would typically try and say is typically power when you're buying from the grid costs 8-9 rupees. And this would be at least 50 to 60% cheaper than that, number one. Number two, I think at the group level itself, I think we're looking at savings over 150 to 250 crores over the period of next 2 to 3 years, just on current demand. As we move forward, obviously the power requirements are increasing across group companies. So I think the savings would be very, very substantial.
Devansh, two questions. Number one, would you eventually look at an IPO for this particular platform? We understand you have very large capex plans, close to 12,000 crores is what you have spelled out. So how will you fund that? So would the promoter entity be taking on debt? And number two, what is the status as far as corporate simplification is concerned? You have 3 listed entities, and along with that, all of them are pretty much in the same space. One is a turbine generator, the other one provides EPC services, the third one gives O&M services. So when will we see a simplified corporate structure as far as the GFL group is concerned?
Look, so to be fair, I think we've kind of simplified the structure to a great extent. Post the demerger of a lot of these entities and a lot of the group realignment which was happening. We now have IWEL, which is the holding company of IWL, in the final stages of merging into Inox Wind, right? So that makes it one pure play wind company. We will continue to keep Inox Green as a separately listed entity because we see huge traction on the green services O&M play. That's an annuity business, very high margins, very high growth. Inox Wind is the manufacturing arm. The third piece, which is not listed, which gets demerged and eventually gets into being a listed entity sometime next year, is the EPC arm called Resco. I think that itself is growing exponentially, not just on the EPC play, which Inox Wind does, given the order book it carries, but we're going into a lot of other pieces. We're going into hybridization of power, which plays on solar. We're going into cranes. So a lot of those pieces coming into the play. With respect to your question of how we intend to fund this, look, so the promoters have already pumped in a significant capital into the entity. And now we've gone and raised this 300. This covers us for about 600 megawatts of execution at this point in time. And the internal accruals itself can take us to about 1 gigawatt. We will have some kind of capital raise next year, which would provide us enough capital to get to about 2 gigawatts. So I don't think it's going to be too large a dilution. It's again going to be on similar lines. And whether we IPO this or whether we go in for another secondary raise is something we'll decide at that point in time.
Right. Devansh, we'll keep touching base with you as soon as developments such as this keep coming on. Wish you all the best. But with that, it's all the time we have on this edition of Midcap Radar. Your stocks when we return.
क्या इस तीसरे कार्यकाल में, क्योंकि आपकी कोalition सरकार है, क्या आपके ऊपर कुछ दबाव है? इस बार बजट बनाते वक्त निर्मला सीतारमण क्या सोच रही थी? आपने बिहार के लिए और क्या कहते हैं आंध्र प्रदेश के लिए सॉप्स भी दिए हैं, आपने फार्मर सॉप के बारे में बहुत सारी बातें की हैं, तो क्या पहले से कुछ फर्क हुआ है, कुछ बदलाव आया है कि इस तरह का भी एक रोल बैक सरकार का भी आप लोगों के लिए कहा जाता है कि आप लोग कुछ करते हैं फिर रोल बैक कर देते हैं, तो किसी तरह का कोई दबाव है क्या? मैं ये समझना चाह रहा था।
मुझे नैरेटिव सेट करने वाले और उसके आगे बढ़ाने वाले, उसमें एक आध मीडिया के लोग भी हैं, मैं छोड़ूंगी नहीं उस बात को। मीडिया के द्वारा आगे बढ़ाने के लिए ऐसे एजेंडा सेट करने वाले तो पूरे उनके परफॉर्मेंस हाई लेवल पर है। नैरेटिव सेट करो, फिर सरकार उसको एक्सप्लेनेशन करते जाएगी या डिफेंड करते जाएगी, ये तो चल रही है और बेबुनियाद बहुत सारे नैरेटिव आ रही है। इसमें ये एक यू टर्न का मामला भी हुई है। यू टर्न कहाँ हुआ? मेरे मंत्रालय के विषय में मैं बोल रही हूँ। जब हर बजट के समय पर पिछले 5 बजट्स में बजट पेश करने के बाद पूरे देश भर घूम करके चार्टर्ड अकाउंटेंट्स हो, टैक्स एक्सपर्ट्स हो, इंडस्ट्री, चेंबर ऑफ कॉमर्स हो, सबसे बात करके पेश किया हुआ बजट के ऊपर सुझाव ले आकर के ट्रेशरी अमेंडमेंट्स हम करते थे, जिससे मुझे याद है, बिल्कुल याद है, एक बार शुरुआत में लोग हमसे पूछते थे ये क्या है, अभी बजट पेश हुआ और रिसेस के बाद सेकंड सेशन शुरू हो रही है बजट का, उस समय आप इतने सारे अमेंडमेंट्स ले आ रहे हैं। मैं डिफेंड भी किए, अमेंडमेंट्स इसीलिए ले आ रहे हैं, सुझाव जनता से जब आता है हम उसको अपनाते हुए उसको करेक्शन के रूप में ले आ रहे हैं। ये इंडेक्सेशन के मामले में, कैपिटल गेन्स और इंडेक्सेशन के मामले में हमने जनता का आवाज सुनने के बाद, ऑल्दो पहले जब ले आए पूरे कंसल्टेशन के बाद ही ले आए,
जी
हर असेट क्लास को एक जैसे ट्रीटमेंट देना है, इसीलिए ले आए जो प्रस्ताव था। मगर जब सुझाव आए, हमने सिर्फ प्रॉपर्टी के लिए इंडेक्सेशन का ऑप्शन भी रखा
जी।
और बजट में जो ऑप्शन हमने ले आए, क्योंकि हर एक असेट क्लास को एक ही जैसे ट्रीटमेंट के लिए उसको भी रखा और चॉइस दिया एसएससी को कि आप इन दोनों में वर्कआउट करो और जो आपको कम लगता है वो उपयोग करो। ये थोड़ी ना यू टर्न है। No, government has U-turn. This is not U-turn. I am accommodating the suggestion which has come from people उनके बेहतरी के लिए। So, इसमें U-turn का नैरेटिव हमारे ऊपर डालने वाले से मैं पूछना चाहती हूँ, आपके अंडरस्टैंडिंग क्या है U-turn का? इसीलिए उस नैरेटिव को आई रिक्वेस्ट द मीडिया, आप भी आगे बढ़ाना है तो समझ लीजिए पहले उसमें सच्चाई है कि नहीं तो बढ़ाना बंद करिए।
नहीं, इंडेक्सेशन वाला अप्रिशिएट भी बहुत किया गया।
Very good afternoon. You're watching Your Stocks in the Mumbai News Studio. I'm Ekta Batra and with me is Vinny Motiwala. Well, it's turning out to be a session where we've given up a lot from the day's high for the Nifty as well as for the Midcap Index. So case in point would be the Nifty, which where the high was around 25,482, record highs for the markets. But since then, we've given up around 140 odd points from the day's high. As of now, currently around 25,339 is currently where the Nifty is at. The Midcap Index too has shown quite a reversal today. So currently down around 0.8%. And we have the Bank Nifty, which is the key one which is standing out today on the gaining side. So we have the Bank Nifty, which is up around a cool 580 odd points. So that seems to be the trend for the markets. Maybe a lot of caution ahead of that Fed meet and whether they go front loaded with a 50 basis points cut. Hi, Vinny.
Hi, Ekta. Good afternoon. Surely an interesting day that's panning out on the market specifically as well. So, yes, we'll be keeping an eye out on that. Today, Nifty IT, that's clearly under pressure. So, Infosys, HCL Tech, those are seeing some bit of a sharper fall. We do have Reliance Industries, the heavyweight, also falling in trade and leading the decline, especially for the Nifty 50 today. And let's pull up some of the pharma names like an Abbott India, Biocon, all of them too under pressure. So Nifty Pharma also among the top sectoral losers, Ekta, that we're seeing coming in.
Yes,
today.
absolutely. The Nifty IT index is not doing too well in today's trading session. There are select stocks within the pharmaceutical space which are showing some amount of traction, but we do have a lot of queries in the next 30 odd minutes. So let's get going on that. We have Rajat Bose joining in on the technicals, Parthiv Shah who's joining in to talk about the fundamentals. Rajat as well as Parthiv, welcome to the show. Well, just before we kick off in terms of the queries, Rajat wanted your thoughts in terms of what you saw for the markets today, the kind of reversal in trend.
Good afternoon, Ekta, and good afternoon. I don't know her name.
Vinny.
Your co-anchor, Vinny. Okay. Well, good afternoon, Vinny, and also good afternoon to Parthiv. What I would like to say about the Nifty is that it is too early to call it a reverse. It is sort of the knee-jerk reaction that you see, because you see at the moment Nifty is only 0.28% lower, and the movement, if you see, it is more like a sideways trading that is seen in the Nifty. Bank Nifty, of course, stands out with a 600-point gain. But there also, I would say that it is a mixed bag. If you look at ICICI Bank and HDFC Bank, they are really doing well. But if you once you go into say, apart from that, I found that Bandhan Bank is doing really well. But there are PSU banks, there are other, even Kotak Bank for that matter. They are not showing that much traction as such. So it's even Stevens, yes. Standout winners, you would say that things like, stocks like Alkyl Amine or say Fine Organics, of course, they were doing much better in the earlier part of the day. Now they have also lost ground for a bit. Overall, I would say that don't get too upset unless, of course, there is some major selling in some pockets. Although Reliance is not doing so well, maybe that is the reason why you are not seeing Nifty getting traction. Overall, Bank Nifty is showing some traction. Nifty is sideways.
Right. Okay. That's the view coming in on the markets. Good afternoon, Rajat, as well as Parthiv. Parthiv, let's start with the first query with you, because this one is coming in for Bajaj Housing, and the viewer here is Arun Shastri from Mumbai, who's holding 1,000 shares of Bajaj Housing at a price of 157 rupees per share. Wants to know whether the Bajaj stock can become like Bajaj Finance in the next several years. What is the word coming in for Bajaj Housing? Obviously, the recent one that has made the list on the D Street debut.
Good afternoon, everyone. Actually, after a stellar listing, if the IPO price had come at $70 in terms of price to book multiple, quoting at somewhere around 2.7 times FY26 basis. This is after the funds that they received from the IPO proceeds. And now post-listing and the price at which the gentleman has bought, we are talking of valuations of almost 6 times FY26 price to book multiple. And looking at the growth trajectory of this company, I think they've done stupendously well in terms of growing their AUM to the tune of 28% compounded over the last 4 years, despite the blips during COVID. Not only that, I think in terms of capital adequacy, the company is extremely well paced. And more importantly, I think they seem to be confident with their body language that such growth trajectory would be sustainable going ahead. Plus, they have one of the lowest cost of funds because of the AAA rated balance sheet. And the credit cost is also one of the lowest in terms of the peer sets as well. And historically, if you see, I think the Bajaj Group, especially Bajaj Finance, has always quoted the premium. And similar premium valuations are kind of attributed even to Bajaj Housing Finance. Our sense is the stock might consolidate for some time. I think the market would like to see upcoming 2 quarterly results post the IPO listing and see how the growth trajectory is, how the management call commentary pans out. And then I think the next leg of growth will start. But I have no doubt, even if the investor is willing to hold from these valuations over the next 5 years, this can really compound wealth. I think it's a fantastic franchisee. And still, in terms of the mortgage penetration as a percentage to GDP, India is still at 9%, vis-a-vis a lot of mature developed countries where I think the penetration is as high as 60-70%. So long way to go.
Okay, all right. That fundamental point is taken. Obviously, you wouldn't have data on the technicals, Rajat, at this point, but the comparison is with Bajaj Finance. So wanted your thoughts on the technicals of Bajaj Finance. The stock is doing well today, but it's had a lackluster year. There have been concerns about competition seeping in. What is your sense in terms of Bajaj Finance, the technicals there?
Well, before that, I would like to give a small assessment about how Bajaj Home Finance is doing. See, the kind of movement that is there, if you look at the Bajaj Finance from daily point of view, technical analysts like me would be bereft of data. But if you look at 5-minute chart and things like that, there is enough data already there. So based on that, 164 to about 161 is the key support area, at least in last 3 sessions. What I would say is that unless 160 is taken out decisively, Bajaj Home Finance doesn't look that bad. Regarding Bajaj Finance, what I would say is that this is an old war horse and it has moved up quite a bit, but it has actually reached the resistance levels. Only when 76.80 is decisively taken out, there would be further upswing. I would say Bajaj Finance is a great shadow. As per Financial Times, it is called a shadow bank kind of entity, and this looks pretty good. So any Bajaj Finance shareholder should continue to hold on to their position unless it falls below 74.80, which is the 200-day exponential moving average, at least on the shorter term chart.
Right. Rajat, I'm going to come back to you. This query is coming in for Tata Motors, and the viewer Pranav is from Mumbai is holding 30 shares of Tata Motors at a price of 800 rupees per share. Should they continue to hold this or maybe look to book out their profits, given that the stock has seen a bit of a correction in the last 1 month specifically?
See, from the levels of about 1150 plus, in fact, the high was 1179 recorded on 30th of July. Now we have come very close to the 200-day exponential moving average, which is at 933 as we discussed the stock. Now, what I would like to say is this, that when a major stock like Tata Motors tests its 200-day moving average after several months, even internationally, even in other markets, in our market, institutions come in to buy. So I wouldn't suggest that you get out at these points. Bounce, if it fails to take out 1050, then seek an exit. To hold it with a stop below 900.
Okay, all right. That's on Tata Motors. Fundamentals, would you have a view, Parthiv? Damu?
See, I think short to medium term, I think it could be a struggle for Tata Motors, especially attributing to the fact from the last con call, management did allude to the fact that the global demand for the luxury cars seems to be kind of tapping down. And more importantly, I think much of the valuations that Tata Motors gets is thanks to the fact that the JLR platform was doing extremely well for them. No doubt, I think it's still a good runway ahead for them in terms of the pipeline that they have in the luxury car market. But with the global slowing down, I think that could impact the short to medium term trend for this company. But I think for a longer horizon, we are very upbeat because despite the recent correction that we witnessed in the stock, I think the valuations are still comforting and the domestic portfolio is also firing on all cylinders. They might kind of further unlock value in the EV segment, and the CV segment, the commercial vehicle segment is steady state right now. So overall, I think all the verticals are doing well for the company, but on any further declines, I think then only we would suggest further add to this company for a longer horizon.
Okay, all right. So that's on Tata Motors. The stock, as you can see, is given returns of over 50% in the past 1 year. We now have Ritu, who writes to us from Noida. She holds 15 shares of Wipro, which she's bought at around 500 rupees per share. So she's just about flattish with a positive bias. She wants to know what to do, whether to buy more or to exit. Well, it's a day where this query comes where the IT index itself is in a difficult situation. That is simply because of profit taking as well as trepidation ahead of the FOMC decision, and not to mention that Accenture has delayed bulk of their promotions by 6 months on account of their outlook. But on the other hand, we have Wipro, which did announce around 8% hikes for salary hikes for their top performing employees in 2024. So, each company is probably deferring a little bit on its outlook at this point. But in any case, what's your sense on this, Parthiv?
See, not very upbeat on Wipro, Ekta, because historically, if you see, Wipro has spent in a lot of their cash flow generation into inorganic acquisitions. And whenever one monitors the organic growth and the inorganic growth that Wipro has given, it is, I think, on an average being subpar and below the industry average growth, below the NASSCOM kind of commentary growth. And when there are peers like Infosys, TCS, in terms of constant currency growth, in terms of the total contract value, deal pipeline, and in terms of the client mining, I think they have fetched far, far superior. And our sense is that at current juncture, I think over Wipro, I would still prefer Infosys. I think the commentary was pretty robust, and more importantly, I think the management's body language in terms of the new products that they are eyeing, especially in the generative AI, looks very encouraging. And our sense is that I think Infosys still has a slight valuation discount to that of TCS, and there is some catch-up to be played. But overall, I think we would prefer Infosys over Wipro.
Okay. That's the word coming in on the IT side. But on that note, we're going to slip into a very short break. But viewers, don't go anywhere because we'll be back with more of the stock-related queries after the break.
Is a terrorist and he needs to be ended. So we need everybody from around the globe to stop what they're doing and come here now and support the Ukrainians to end this war.
Welcome back to Your Stocks on CNBC TV 18. We still have with us our experts Rajat Bose as well as Parthiv Shah to answer all your stock-related queries. Parthiv, this next query is a long-term query coming in from Mr. Ramakant from Maharashtra. He's holding 30 shares of HAL at a price of 3,872 rupees per share. While obviously in the last 1 year, we've seen, these defense names clearly see a very sharp run up. What is the view on this one for the next 5 years? Should the viewer continue to hold this or maybe book out their profits?
See, I'm so glad to hear we are talking about a 5-year view vis-a-vis a 5-month view in a stock like HAL and most of the PSU defense stocks where the valuation run-up has been far higher as compared to the current fundamentals. But talking about HAL, I think if one has such a long horizon, even from here and especially post the recent retracement from its all-time highs, I think the stock is attractive. One of the reasons being, I think, in terms of the aircraft jets that HAL has in terms of the capability, the technology, none other peer has in the country. And I think going ahead, the way government is looking to up the defense budget and more allocations coming here, HAL's order book, I think, should go up further. And more importantly, I think government is also looking at a lot of technological tie-ups for such defense companies. And HAL has been successful in such tie-ups, and especially in terms of even the helicopter manufacturing. The capacities are huge for this company, and I think their execution track record so far has been pretty good. Going ahead, we expect, I think, more order inflows. And with the 5-year view, I think I have no doubt that HAL looks good as a portfolio hold for now.
Okay, all right. But on the technicals, all of these defense stocks have obviously rallied significantly. But in particular, Rajat, how does HAL look to you?
Technicals are not suggesting that anything great at the moment. I'm looking at not the daily chart, but the weekly chart, even monthly chart. There is a parabolic formation. And I do agree with the assessment that Parthiv had about HAL fundamentally. But the point is that how much of it is in the price? Because whenever there is a parabolic rise, and that means within a very short period of time you rise so much, what happens is that there would be a phase when the stock either would be moving sideways or will seek a correction that will be in some cases 50% of the total rise. So if one has a 5-year horizon, even I would say you continue to hold it. But otherwise, I would say that this stock is pretty much rich.
Okay, all right. So that's on Hindustan Aeronautics. But we now have a query coming in on Ola Electric. Ruthvi Jain writes to us from Surat, holds 200 shares of the stock, which he's purchased at 142. So sitting on a loss, and she wants to know what to do, whether she should hold or sell. Well, we're talking about 5-year perspectives here, Parthiv. So I wanted your thoughts in terms of how you would approach Ola Electric. Sitting on a loss currently, but do you think that that's probably going to even out? And what would your approach be?
This is a very tricky question, Ekta, and as you've also been tracking, I think Ola, despite I think lackluster IPO participation, had a blockbuster listing post the IPO. And I think a lot of market participants believe that this is a company which can do things differently as compared to a lot of their other peers. And I think the management has been very upbeat on the fact that their backward integration strategy, which is, I think, the battery manufacturing, the gigafactory, a lot of capex is happening there, should eventually help them to kind of become, a very profitable company. The reason being that battery cost in the EV two-wheeler space, and now that they've also launched bikes since 15th August, where I think so far the initial trends suggest that the demands have been very good. If at all, I think they can do something good in terms of the battery technology and reduce the cost, then probably such elevated valuations are justified. But my sense is I think it's better to wait and watch. I think it's prohibitively expensive in terms of valuations right now. And I would prefer a major correction in this counter before entering it even for the long term.
Okay, you would expect a bit of a correction on this counter, Ola Electric. Rajat, I know it's a recently listed company, but anything in terms of a view for Ola Electric, what are you looking at it right now?
I think it had a low of 95 and thereafter it went up quite a bit, I think close to about 160, 157. After that, it had given a major correction and it tested levels close to 100, now trading at 117. If one has already invested, then I would suggest to continue to hold on with a stop below 95 because, yes, it had a stellar listing and stellar listings are a dangerous ballgame because they retrace most of the gains that they show. The Nykaa, the Tata Technologies, they are cases in point. Similarly, Ola Electric is that, but at current prices, I would suggest one should continue to hold on with the stop below 95. And on the upside, once it crosses 130, then there could be fresh traction in this.
Okay, all right. Well, we now have Preeti, who writes to us from Patna, holds 20 shares of BEL, which is at 180. She wants to know whether to hold or sell at this point in time. She's saying on a marginal profit at this point, but that's because of the quantity being less. But in any case, Rajat, your view on this?
You're talking about Bharat Electronics, right?
Yes, another stock from the PSU space which has seen a good upside.
Yeah, that good upside is another case of parabolic rise. This is now in an intermediate downtrend, and the downtrend is not showing any sign of abating. So what I would feel is that either you hold it with a stop below 240, or you get out at current prices, because immediately I don't see Bharat Electronics jumping back to its 340 high anytime soon, or even 300 levels. It needs quite a bit of consolidation because it had a stellar run. At 120, it was a great stock. At 282 or 340, it's a great company, but not a great stock.
Right, surely keeping an eye on those levels over there for BL. But that was the last query for today. So thank you so much, Rajat, as well as Parthiv, for joining in with us on the show, as well as solving all the viewers' stock-related queries. But with that, viewers, we are absolutely out of time on this edition of Your Stocks. It's a goodbye from Ekta, myself, as well as the team who put the show together. But do remember, you can always email us your queries, and we'll address them with our experts. Stay tuned in for Closing Bell up next.
How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajaj at these times on CNBC TV 18 and CNBCTV18.com.
Taiwanese index though remains lower, below the flat line, trading with losses of just around 0.2%.
Gold imports have surged because, if you remember, two months ago, duty was cut.
The target stays the resistance zone, which is the 25,475 to 25,530 level.
It has been cut down to zero. That's the windfall tax on crude oil petroleum.
India has now become the highest weight in the MSCI emerging market basket.
And yesterday, nearly 1,500 crore worth shares were marked on the NSE for delivery.
Absolutely quiet start. It's 25,400 on the Nifty.
Ahead of the rate cuts, it would be, a more kind of tailwind for the sector.
Very strong fiscal impulse of about 6% of GDP.
From early June, the Nifty IT index is up 30%. So there is also profit booking. It's new highs for the Nifty and the Sensex, so milestones keep getting hit.
Other fundraise that's happening at Nazara, and this time it's for about 800 crore rupees.
Maharashtra and Gujarat have always had a per capita income well above the national average.
Some pressure that has set in. Nifty is down 120 points from the day's high.
Sharpest strategies, top market trends, unmatched perspectives. The trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell. Broadcasting live from the CNBC TV 18 Motilal Oswal Studios in Mumbai.
Well, the countdown is on to the big global event, and that is the outcome of the U.S. Federal Reserve meeting. We're in the last 1 hour of trade. You just saw glimpses and highlights of the day gone by. I'm Surabhi Upadhyay. With me, as always, is Reema Tendulkar. And Reema, we're getting some really pronounced moves in the market at this hour, right? You have banks rejoicing, IT sulking, midcaps getting a little spooked. So it's all happening now in the last hour.
It's all happening, and the Fed meeting is actually currently underway. The decision is going to be out at 11:30 p.m. India time, but things are looking a bit shaky out here in India. We were actually cruising along just fine till about 12:45. In the morning, we went on to hit new record highs on the Nifty and the Sensex, and suddenly, at about 12:45, there was this big fall in the markets, and since then, we haven't quite recovered. Yes, we're off from the session lows, but we're still deeply down for the Nifty and the Sensex. And the problem is not just IT. The cuts on IT have deepened. Now the Nifty IT index is down 3.5%. In the morning, it was down 2.5%. So absolutely no recovery in IT. All the heavyweights, TCS, Infi, HCL Tech, Wipro, across the board, the large caps is selling off. But the other problem is Reliance Industries is under pressure, and the fall in the markets, in the at least the frontline indices, Nifty and the Sensex, coincides with the intraday fall that we had in Reliance Industries somewhere around noon to 1. There you have Reliance Industries. But what's supporting us is banks, and the sector churn is still taking place. Money is moving out of IT and it's going into the banking names, and even the NBFCs like Bajaj Finance, Shriram Finance, or heavyweights like HDFC Bank. So, ahead of the Fed rate decision and finally that first rate cut after 4 years, it's expected to boost, the FII favorites, banks. And that's already, taking place.
Absolutely. I mean, banks are ruling the roost and how. And on IT, the fall is not just restricted to the big stocks, the large caps, or even mid-cap IT. I mean, look at names like Memphasis, or look at something like L&T Tech, quite a few names, some of the newer companies, which are at the cross-section of banking and technology. Something like a Zaggle, for instance, is also down quite a bit. So pretty interesting the way the trends are playing out right now. Actually, before we get started, I thought I'll put some trivia on the table, some inputs on what the correlation is between Fed moves and our very own Nifty. And these are some points I picked out from a report that Capital Mind put together and found them quite interesting. So let's share them with the viewers as well. So the Capital Mind looked at the data over the last 3 decades in terms of the Fed cycle, which is either tightening or easing. Now, the Fed has announced a 50 basis points rate cut actually only 10 times in the last 3 decades. I mean, data going up to 34 years. So a 50 basis points rate cut only 10 times. And the Nifty has given an average or a median, not even an average, the median midpoint return of about 1.5%, the day after these big mega cuts, the 50 basis points rate cuts we're talking about. The most frequent Fed action in the last 3 decades, in the last 34 years, has actually been a 25 basis points increase. That's what the Fed typically has done the most, just a quarter bips hike. If we talk about the cycles, then in this span of 3 decades, 34 years, there have been 6 cycles, alternating cycles, easing and then tightening. And for us, which are the cycles that have been the most beneficial in terms of best Nifty returns. Well, the biggest one is a 310% Nifty move. So Nifty, quadrupling basically. This is between July 1990 to February 1994, but it also coincided with, what is known as one of the biggest scams the market has seen. So you want to, put that caveat there as well. The next big move on the Nifty was actually during the tightening cycle, which was from June 2004 going up to September 2007, because that was the big period, the mother of all bull markets, the one that we knew it back then. And the Fed kept tightening, the market kept moving higher. I remember, I have living memory of that time. And then, of course, it all culminated in the global financial crisis. But this time, we're all set to look at an easing situation all over again, and let's see if it can be as beneficial, because Rima, I guess the difference is that global markets have already partied very hard going into this easing cycle. So let's see what happens from here.
I know the starting point is very different in terms of the valuations globally and in India. And even that question whether US is going to get into a recession or can it, get away with a soft landing, that also remains to be seen. But, out of the last 12 rate cuts, in 10 of them, Indian markets have given a positive return a year later. So generally, it's positive, but this time could always be different. We don't know. But how should you position yourself in the last hour of trade? Mitesh is now with us for a few closing strategies. Mitesh, the mic is all yours. First, your thoughts on the day, the way IT has come under pressure, banks are providing support, the trends you've observed, and then your top trades.
Good afternoon. I think, that is the most striking feature of the day, that the IT stocks have given breakdowns which could see some kind of severe profit booking. So my understanding is that I think, you should look at possibly exploring some short positions over there. Disclaimer, we have put option positions in a couple of IT names. And the financials, I've been handling for the last 2-3 days that the Bank Nifty will start covering up for its underperformance, and I think that's happening. It's met the target of 52, 850, 900 zones and then slightly retraced from there. But my sense is that, once we start getting past today's high, the Bank Nifty could then possibly look at retesting its all-time high of 53,350. So we'll still maintain a positive bias overall. And looking at shorting, a couple of IT names, that's the idea. In fact, I have a sell on persistent systems. Today's low is 5115, so sell below that. And then keep a stop at about 5180 and look for target of 4960, maybe even lower. So that's the first target which we'll look at. And also a buy on Bandhan Bank with a disclaimer that it's part of my portfolio. Recently I bought it, showing some signs of reversal on the short to medium term charts. So it's a buy with a stop at 210 for a first target of around 221.
So just remember, fundamentally for banks, a cut in interest rate may hurt margins because loans get repriced faster than deposits. So initially, at least, there could be a negative impact on the margins, the net interest margins of banks. But on the way up, if the borrowing cost comes down, it may spur more borrowing. So therefore, lending goes up. And that is a positive. Maybe it improves the asset quality too. Defaults may come down. Not that it's a problem right now for the Indian market, but generally, it's seen as a positive for asset quality. And plus, when flows improve, to emerging markets due to cuts, a decline in the yields in the mother market, US, banks have been much loved by the FIs and they've gone through a period of underperformance. So banks today are up 1.2%. It's a 600-point return at the day's high. But let's focus on some other buzzing stocks. Reliance Power, Reliance Infrastructure are surging in trade as they settle obligations. Vivek is here to tell us more about the backstory and the story.
Well, that's right. So Reliance Power as well as Reliance Infra, both of them in focus today. Reliance Power, remember, this particular company had quite a bit of debt and also had given significant undertakings as a guarantor on behalf of Vidarbha Industries Power Limited. Now all of these obligations have been fully settled. So on the back of that, there is a release as well as discharge of all of the corporate guarantees, undertakings as well as claims. And the total amount of all of these claims have come up to close to 3,872 crore rupees. So now what the company is saying is that the listed entity has zero debt from banks as well as financial institutions. Remember, the company is an operational company with a commission portfolio of close to 5,300 megawatts, close to 5.3 gigawatt. Now coming to Reliance Infra, again, a significant development over here as well. The debt repayment as far as the company is concerned, remember, there has been a one-time settlement that has been agreed between the company as well as Edelweiss Asset Reconstruction Company. So all obligations with respect to the NCDs, which is the non-convertible debentures, of close to 385 crores have now been settled, and on the back of that you're seeing significant bounce back, both and also Reliance Infra debt now down significantly, just around 475 crore is where that particular company, listed company debt stands at. So significant development for both Reliance Infra as well as Reliance Power, both the stocks doing very well in the session today.
Okay, absolutely, yeah. Quite a fresh lease of life coming through. Vivek, thank you very much for that. Those are two main names in focus today. Well, let's say hello to Prakash Diwan. He's joining us on the show this afternoon. Prakash, thanks very much for joining in. So let's get your broad thoughts. An interesting reaction, right? Usually the market's absolutely, non-perturbed going into Fed events. It's usually something that plays along expected lines. But this time, I think there's slightly more nervousness. What's your sense? And what's your sense specifically on IT as well, looking at the big cuts that are coming in?
Good afternoon, Surbi. So, markets never cease to surprise, right? And for a lot of people who have never seen a rate cut cycle begin, this is going to be a first of its kind. So, interestingly, this is something that has been penciled in and anticipated for so long. It was just a matter of timing. Now that we are right on it, it's butterflies in the stomach in terms of how much is it going to be and what's going to be the commentary going forward. Is it going to herald or start off a absolute new trajectory or cycle of rate cuts? Now, that is something which the market is waiting for the simple reason that nobody has a very clear understanding of the post-cut or post-announcement reactions. And that the brunt of it is going to be in IT. I mean, Rima is right next to you. You can check with her that there has been absolutely no indication of any kind of a increase in order booking for most large companies if the rate cut were to happen, because the recession or the lack of it will probably be decided only after a quarter or two. So you will go into this rate cut with very high elevated valuations which had built up for whatever reasons. So I think the market's being very sanguine, Surbi, if you really ask me. Pairing of positions on sectors that have done well and getting into sectors that have yet not done well is the right thing to do. And my sense is that in India, the domestic financials are poised for a very decent potential re-rating, given that you could have credit growth, you could have interest rate softening, and you'd probably also get into 2 quarters of very good hyper growth kind of levels, which you've not seen in the last two. So, all of that's coinciding with financials and they're underweight. So that's where, it's happening. Money is being pulled out because it's already done well. IT is probably got to pause for some time. I think post-December, Jan is when you could probably look at IT, not till then.
Fair enough. But Prakash, butterflies? Really? I thought butterflies, you remember the real butterfly times, right? When Bear Stearns was getting sold for $1 and when Lehman was going bankrupt and when Mr. Ramalinga Raju one day finally said that there's a 7,000 rupee fraud in Satyam. Those were butterflies, right?
Those were gut-wrenching days.
Oh, yeah, actually, yeah. Yeah, that was stomach-churning stuff.
Yeah, absolutely.
No, true. But, let's take that point on IT forward. Rima, everyone's watching the screen wondering suddenly there is, so much profit-taking going on. Prakash is saying maybe it's just sector rotation, some churn and change of positions. But what are you picking up?
I agree. There is no news which justifies a sudden 3.5% fall. It's just that yesterday stocks were at an all-time high, the Nifty IT index. Since the beginning of June, the Nifty IT index has given a 30% return. So there is routine profit booking, which takes place ahead of a big decision. Also, Accenture overnight announced that it's changing its promotion cycle. So earlier the promotion cycle used to be in December, and now they're permanently changing it to June. This, the street is reading, it is, it's currently a challenging environment for Accenture given their focus on consulting, and therefore they have, changed it permanently. It's not a one-time thing, it's a permanent thing, but it's still seen as a sign of challenging times for Accenture. But, coming back to the way Indian IT companies are reacting. So we spoke to Happiest Minds in the morning. That's a small company. Its top line is on an annual basis about $200 million. So that's not really a benchmark to gauge the IT services. But Happiest Minds told us that it's demand as usual. Things are on track. They're maintaining their FY25 guidance. But LTIMindtree, now Citi had a chat with LTIMindtree. So they've come out with a post-management meet kind of a report where they're saying that Q2 is going to be similar to Q1. there is no pickup in discretionary demand still. Most of the order booking is still related to cost takeout. They're saying the green shoots in the environment is not translating into an improvement in the order book. The pipeline is as it was in the past. So that's also important. And even on Q3, right, there's some expectation that H2 is going to be much better because there is pent-up demand. People have repressed spending. So at some point, even though Q3, Q4 is typically not great, maybe this time it will be different like it was post-COVID. But again, over here, the management is not committing. They say, we'll see how furloughs play out. We'll get clarity only in Q2. So basically, in a nutshell, what LTI Mindtree had to, indicates, right, for the industry is that there is no pickup in demand. So then you marry it to the kind of stock rise. You've got a big event coming up. So there's just some nerves playing out. Butterflies in the stomach.
There's
right?
some butterflies.
Some butterflies in the stomach, right? You make, just book some profit.
Okay.
But, yeah.
Fair enough. Prakash, coming on this, since you're saying, this could be just nothing but tactical position change, would you buy anything? Pure fundamentals adding to the portfolio. Since IT is now giving the dip, would you buy any stock? IT?
So, absolutely. So just to add to Reema's point, it's a coincidence she spoke about a stock, a company that I track, and that's Happiest Mind. Now, look at what's happening, in the phase where there was a lot of belt tightening for most IT players, especially the smaller ones, given that they are very vulnerable. Most of them have diversified their revenue streams with me. And what's going to happen is come January, and remember there's a big event in the form of the US election, which is going to decide a lot in terms of how the economy is going to expand, how rapidly it's going to expand, if I will. And then January onwards, you'll probably see a lot of workflow start coming to these companies, which are very geared up. My idea is to buy IT companies somewhere around, second half of Jan, when things will be much more clearer. And it could be a very strong run. So 25 could probably see ITs do well as pharma has done well in 24. And it could outperform some of the other larger sectors. So I would definitely buy, but wait for some time and understand. And remember, the good thing is just anecdotally, a lot of annual reports are out now from IT companies. And if you read some of them, the read-through is very clear that they have made themselves much more resilient and future-ready in terms of shocks to the economy. So that's going to help, the growth that can come back. And as Reema said, it could be that post-COVID kind of a phase where there's rapid growth and sudden key expansion also. So we'll wait for that. But yes, it does look promising at certain lower levels.
Do you own Happiest Minds, or is it just a stock that you track, waiting to buy?
No, it's just a stock that I track. Otherwise, I would have definitely added the disclaimer. Yeah.
Okay. It's done phenomenally well, right? As the management was saying, the issue price was 166, and in a span of 4 years, the stock is now at levels of about 800. So it's had a fabulous run over the last 4 years. But BSE, Prakash, Monday, big pop. Today, another big pop. It's just getting more and more expensive. That it's got NSE has that much more to catch up in terms of valuation. What's happening?
So it could be the other way around, because the NSE, listing is getting closer to be a reality. But what's happening is people are penciling in the fact that even from the current, in the last 1 month, I've seen quotes going from 5,100 per piece to almost 6,000 plus now. So it's a rapid 20% change in terms of, what people are willing to pay even before listing. Post-listing, it could probably almost be, another 30, 40, 50% upside. We don't know. It depends on when it gets listed. But BSE is also trying to kind of play catch up for the simple reason that the business is expanding so much that either either of the two that you own in your portfolio, you will get. It's something like K FinTech and, CAMS. I mean, both of them almost mirror each other's growth, except for certain nuances from a client perspective. But here, I think it's much more fungible, much more equalized. And as the market matures, you'll have all segments contributing, and which is going to be very favorable for the BSE as well. So I think it's a good bet, but it's too expensive to buy at this stage. Gone are the days when it was available in those sub-1,000 levels for so long. You'll probably have to wait for a bad day in the market or a bad week in the market to buy and make money. But I don't think if you own, you need to be in a hurry to sell.
Okay. Prakash is taking a chance with this one because there's news, and our colleague Vivek was talking about it. Reliance Infrastructure, right? Don't remember the last time we discussed the stock. But I guess the market seems to be excited because they seem to have put most of their troubles behind them. I was looking at the shareholding. So Mr. Anil Ambani and family, they still own about 16%. The rest is across a lot of institutions. There's a fair amount of foreign ownership as well. Would you at all even consider, looking at it, because the market loves to play these flips. believing the worst is over, and then, you know, we all remember what, let's say Suzlon, right? And the market wants to believe that they're finding another Suzlon every time. So, but tell us if this could go that way, or maybe this could be very different.
I really don't know, because I honestly started looking at it after Vivek brought out all the changes that were happening, because they started seeming slightly more real and decisive in that sense. Because we keep on hearing about a lot of anticipation of change, but this was change that could make a big impact on the company. But I still haven't been able to get my conviction built that this is the time to buy, for the simple reason that there could be still a lot of bullets that could hit you and we don't know about. You know, there's so much of history around these names. Suzlon was a different kettle of fish to me, because, you know, if you see, the best part about playing such turnarounds is wait for the turnaround to happen. You may lose a little bit of, you know, move in the beginning, but you actually ride on the larger part of the turnaround rather than, you know, the initial phase, because that's the painful waiting part. So from 9 rupees to 15 was a long time that Suzlon took, but from 15 to 45 was far more rapid. If you draw the graph, you'll see. So I would believe if that turnaround is bound to happen, don't worry if you miss out on the first 10, 15, 20%, but ride the next 80% or whatever more. So it's better to do that, because you could otherwise get trapped in a time correction which could be very long and painful.
Okay, all right. Thank you very much for that, Prakash. A great chat as always. And let's see how this big decision goes, and we'll connect again towards the end of the week. Well, we do have to take a quick break on that note. There's some important news coming in on the flashes as well. The cabinet has cleared the One Nation, One Election proposal. This is, of course, something that the NDA government has been talking about and promising for a while. And it seems that the cabinet has taken another step forward towards it. Well, we have to take that break. And as we do that, here's some good news for our viewers. India's business news leader is now just a click away, introducing CNBC TV 18's all-new app. You can get instant access to breaking news, in-depth articles, analysis, and financial updates at your fingertips. You can download the app from the Apple Store or from Google Play.
A question that everyone wants an answer from you. Can income tax payers expect a lowering of income tax rates? You know, the middle class has been expecting this. Directionally, how do you see this going forward? When will the internal committee's report on the review of Income Tax Act be ready?
Rahul, I want to take this opportunity to explain a few things.
Sure.
Since 2019, the attempt has been to simplify the direct taxation. The attempt has been to make sure that we make the whole process simpler, and that is why, after much of a discussion, a new regime was brought in, wherein right from the beginning the rates were kept low. And we gave the option to the assessees that if they want with exemption a regime, so that they think they've made long-term plans for, taking insurance cover or for the EMI, and therefore they need their exemptions, they could continue with the old scheme. The new scheme was without any exemptions. It was first without standard deduction, and later again, when we heard people's voices, we brought in the standard deduction as well. Now, during the vote on account, again, a lot of consultation, not widely as much as the whole, general budget time consultations happen. But July budget, we had again had a lot of discussions and brought the rates down for investors.
Welcome back. Premier Energies continues with its bull run since listing. The stock has suddenly spiked up again in the last 10-15 minutes. Fertilizer names like RCF and NFL too are now back in the green, so some buying has emerged in them. But the big event that all investors all over the world are watching is going to be that FOMC, the Fed rate decision, and the market continues to be split on the size of the rate cut. CNBC Steve Leisman gets us a detailed rundown on the debate over 25 basis points or 50 basis points rate cut.
Okay, I like how Steve puts it that you can be chill about it, 25, 50, whatever it is, as long as the Fed gets it spot on and ensures there's a soft landing in the US. We caught up with Timothy Moore of Goldman Sachs as well on this big event that is underway. Take a look at his expectations.
From a risk management perspective, we think that 25 makes sense, but you could certainly argue 50. And as I said, time will tell. Get India-specific performance relative to when the Fed started cutting. It's actually much more muted, both on the up and on the downside during non-recession and the recession circumstances I was just mentioning, than it has been for, say, other markets which are more globally cyclical, like Korea, Taiwan, or even some of the ASEAN markets like Indonesia. So empirically and historically, Fed cutting has not been as influential on India as it has been for other markets.
Okay, so that's a global view on what to expect from the Federal Reserve later tonight. Ronak Onkar, Head of Research and Co-Fund Manager Equity at PPFAS Mutual Fund, is with us. Ronak, always a pleasure having you on. So, I was just thinking, listening to our US colleagues as well, and then looking at your portfolios, you, of course, have a big exposure to banks, to IT services, and then, of course, to a lot of the big tech US names themselves. So I don't know, if you do a sensitivity analysis, whether your portfolio will be a little more sensitive to whatever route the Fed decides to take or not. But you tell us, how closely are you watching this event? And really just that, look at the market today. IT is down, banks are surging. Everybody's thinking that the RBI will follow the Fed very soon. But I don't know if that simplistic approach can really play out.
Thank you, Surbi. Nice to be back. To be very honest, not paying too much attention to one rate cut or rate hike or whatever happens. The reason is some of the companies you mentioned, we have been owning these sectors for more than decades. And when we look at some of these transitions that have happened in the businesses, the underlying businesses are far more interesting, and the changes that they're going through are far more interesting to study, because those drive the longer term valuations of these companies. Of course, these kind of cyclical or sensitive events based on macro activity, they do give you opportunity to enter or exit sometimes. But beyond that, I don't think there is too much to read into one specific macro event.
Ronak, hi, Rima here. We were chatting with one market guest in the morning, and he was saying one of the big risks for the market, as he sees the Indian market, is the fact that the monsoon in the last month has not been that great, and therefore the harvesting season has been impacted. So this has implications for food inflation and what the street is anticipating, what the RBI may do in terms of a rate cut, and even the FMCG earnings. Consensus today is pricing in FMCG earnings of about 14% thereabout for this full year, and that may have downside risk. So he's watching out this the last phase of the monsoon, the harvesting season, very closely. Do you think that's a concern you've heard when you speak to companies under your coverage? How would you assess this potential risk?
So I think from a monsoon point of view, I don't know how to give a contextual answer, but some of the companies we speak to in our portfolio companies or even sectoral peers that are there, the biggest challenge is most of them are anticipating a long-term growth for their businesses and industries. However, nobody has a clue as to what the rate of that growth is going to be over a long period of time, and which is natural to be. Nobody knows what the future holds. But the market seems to have gotten the wind where some of these sectors have been bid up to levels where the valuations will look like very unsustainable, or the growth rate that they have to justify those valuations will look unsustainable. So I think that is a major concern today, that irrespective of what complex macro...
Oops, that line is frozen, so we'll try and reconnect with Ronak. In the meanwhile, for the markets, there has been a little bit of an intraday pullback, at least in the large cap space, and a few stocks, which are on the way up, where there's been a bit of a recovery. So, banks continue to do well, banks and NBFC. So the top three gainers are Shriram Finance, Bajaj Finance and Bajaj Finserv. And Bajaj Finance, remember, Morgan Stanley has put out a target price of 9,000 rupees. Nestle is another stock where you are seeing buying today, and Nestle has moved up close to about 1.7%. So that's seen buying emerge just in the last 10-15 minutes. You've got L&T too inching up nearly 1%. So L&T has been slowly, steadily trying to creep up. SBI Life is also higher in trade. And then private sector banks continue to see gains. So whether it's HDFC, ICICI or even an Axis Bank, M&M too is now up close to about 0.5%.
Yeah, I'm looking at the mid-cap market where today's a day of fair amount of correction for a change. That is, we've already discussed mid-cap IT, which is weak. The other names that actually stand out, something like a Blue Dart. Blue Dart had a very good start to the week. The stock was surging in the earlier sessions, and today it's cooling off. Then you have some of these names like Rights, down about 4% as well. So these are some of the ones that stand out. GM Breweries, also a stock that was surging on Monday and Tuesday. It's cooling off as we speak. There is TBZ, which is on the lower side. But, for all the stocks that are falling, and though the mid-cap index is telling you that it's a cut of almost 1%, there are enough gainers as well. Look at HEG. So these are the poppers on the way up. HEG is up almost 8% as we speak. There's ICRA, which is having a very good session as well. Don't usually mention the stock. 5.5% up on an ICRA. Torrent Power, because of the power tie-ups that they announced, the contracts they've got going in Maharashtra as well. That stock's up almost 9%, and the snack maker Bikaji is up 6%. So at an individual stock level, there's still a fair amount of stock buying that is going on. But I think we have Ronak back with us. Ronak, so just complete the point, and also the fact that, I noticed the fact sheet this time around. You guys are still holding on to a fair amount of cash. I think the cash level has only increased from 16% to about 17%. So still not finding enough areas of opportunity in the market?
Apologies, Sobi. I think my internet dropped off, so I could not connect with you. But I agree, the cash levels have been going up, most likely because the valuations that we are seeing are very, very out of the range that we would find comfortable to buy. So cash is building up because we are selling some of the existing portfolio companies. New money keeps coming in. It's a residual cash. Whenever we find good opportunities, we'll definitely deploy. Of course, current market does not seem like the kind of place to deploy, but it's okay to wait on the sidelines for a while and then deploy whenever we are comfortable, when the long-term valuations might look reasonable.
Where have you taken the profits, Ronak? You mentioned that cash is going up because you've also been sort of unloading some positions. So where are you trimming and booking profits?
Some of the names are familiar to all of us who have listened to the interviews over a period of time. Is like the capital market companies that we own, which are IEX, MCX, some of those ideas where we have trimmed a little bit. Even some of the cyclical companies we used to own in the portfolio regarding minerals like NMDC, steel, etc. we have been trimming in the past. Some IT names also we trimmed, like OFSS in the past. So most of these are valuation calls. These are interesting businesses and good balance sheets, but valuations look very, very unsustainable to us.
And any new additions to your portfolio, Ronak?
Sadly, not this time. It's been the same portfolio for a while now.
Okay. And going ahead, are there any other stocks or sectors which are precariously poised that you might exit soon? Where valuations, you've not exited soon, but you'll not book profits, but you're in the process, you're thinking about it because valuations are uncomfortable.
So we watch a lot. So we are deployed more. Like we are only at 17.5% cash. The rest of it is deployed. So if valuations become unsustainable in those sectors, then we will have to relook our stance. But at the moment, it looks okay to hold on to these ideas.
Any changes in the positions on some of your major US tech, the big tech exposures? I know we've had this conversation in the past and you've remained steadfast, still liking a lot of those businesses. Any changes and what's the thinking now?
So no changes in the portfolio, but over a period of time, we have realized that some of the companies we own, like Microsoft or Meta, the valuations were looking stretched in those companies because they have grown a little faster than the peers. At the same time, their stock prices have also risen much faster. So those areas where we are a little cautious about, But I think Amazon, Alphabet is something that we like. And unfortunately, we can't invest more money. But whenever we get an opportunity to reinvest the dividends, we have been deploying that money back into these ideas.
Ronak, what are your thoughts on this booming IPO market in India? Would you call it a mania? I was reading some analysis. I think Prithvi Haldia had put it out in one of the pink papers where he said so far this year in FY25, on an average, IPOs have been oversubscribed by 48 times with an average gain on listing being a staggering 35%. Is it all okay, or is it time to be cautious on the main board IPOs? We've spoken about, the SME IPOs, but here I'm talking about the main board ones. Is it a bit of a mania?
I would agree, yes, to some extent, because the valuations of companies overall, even in the IPOs, are expensive. And when everybody is wanting to sell their shares, we should be a little cautious to see what we are buying. I think that is very important to know which companies you like, what values you're going to pay for them, and over a period of time, how much growth that these companies and sectors can give you, especially in IPOs where the companies may not have a long history of operations, and maybe in the new age kind of areas where the business model itself is not proven yet. I think I would recommend a lot of caution when you look at IPOs. And if you see, even on the main board, stocks have been sold by promoters and even strategic partners and foreign MNC promoters as well. And we are the market who is buying them at those valuations. So we're a little cautious about the overall capital raising at the market as well.
Ronak, finally, leave us with your take on banks, because you have a fair amount of exposure. I'm looking at the fact sheet now. You've got ICICI Bank, you've got Axis, Kotak. So, a lot of the blue chip frontline pedigree names. And there's a fierce debate raging. I mean, there's one side of the debate, people saying that this whole fight for deposits will get worse and the best of the asset quality is behind us and it'll get troublesome from here on. And then there's the other camp, which is saying rate cuts will happen, margins will improve, so on and so forth. So what do you believe, and what's the construct, let's say for the next 1 year, on the larger banks?
So we have been owning these larger banks for a while. That is one of the largest sectoral exposures that we have, about 19.5% in the portfolio. And you're correct. So because there is this non-consensus or a troubling outlook for this sector, the valuations have remained very, very attractive for all the private sector banks that we own. And I think from the point of view of credit growth, these companies are very well poised. From the point of view of fee income growth, these companies are very well poised because they have several segments that generate these fee income. As for the deposits, we have to take a look over a longer term trend as to how the deposit ranges change over a period of time. But I think banks are these consumer franchises who have a lot of brand equity, a lot of network effect, and have operations spread out across the country. They've solved the distribution problem. The technology keeps on reducing their cost of operations over a period of time. And the primary function of a bank to lend money, that continues to happen as more citizens and industries want to build assets over a period of time. So the credit part, I don't think that is broken, but the other side we can debate, and that debate is leading to these valuations remaining attractive. But we'll wait and watch and see how this industry grows over a period of time.
Ronak, thank you very much for joining in. We look forward to our next conversation already. Thank you once again. We'll get into a short break on that note. On the other side, we will get Nimeshan and find out what's happening in the dealing room. Stay tuned.
Middle class. In fact, people with higher income brackets were pushed up towards the lower rates.
Right.
Not one rate was increased. Yes. And the standard deduction for the new regime was increased from 50 to 75,000. So if anything, keeping the middle class in mind, Honorable Prime Minister had in July budget said that the rates be brought down and more slightly higher income also get covered under the lesser rates. So keeping in mind the middle class is what we have done through the new regime, both in terms of increasing the standard deduction and in terms of bringing the rates down. Now, there are very many other things that we are doing for the middle class as well.
Yes.
Now, I understand there are people, middle class, who feel that the rate reduction which is happening for the new scheme should also be available for the old. Right. The enhancement in the standard deduction which is offered for the new should also apply to the old. The new regime was brought in consciously to simplify, reduce, and make it easy for complying. The income tax manual is like this. You have to search for everything, every provision.
Yes.
We wanted to simplify that. All the exemptions and the provisions which are given for it will have to be removed. And therefore, we brought the new regime. So I would humbly request that, and again, it's not as if we brought something and we're talking about it. More than 78% people have moved from the old to the new regime.
Yes.
Which means people are seeing the point of being in the new regime, although we are not compelling anyone to come from the old regime to the new. So keeping in mind the middle class, for rate reduction, for better standard deduction, because the uniqueness of income tax, not just in India, anywhere, is when you give a certain income bracket, a certain rate, suppose you say 0 to 5 lakhs, no tax, nil. That up to 5 lakhs you don't need to pay a tax is not just for those who are earning 5 lakh. It will apply to the first 5 lakh of a person who's earning.
Welcome back. You're with us on Closing Bell, and the market's staging a nice little recovery right now. Actually, the Nifty is trying to come back towards the flat line. Let's straight away go across to Nimesh and get the sense of the nerves around dealing rooms today. Nimesh, the big day is finally here, and very interesting divergent trends playing out in the market, right? What all did you pick up? What's the chatter like?
Well, it's an extremely choppy and volatile day of trade. I guess the export-oriented sectors are under pressure today. So IT is clearly, facing the brunt. The index, IT index is down 3.5%. Not only that, even the pharma names are under pressure today. So it looks like clearly the export-facing companies are under pressure. And on the other side, it looks like there is a bit of sector rotation happening. So banks are doing good. In fact, yesterday there was a feedback that there is selective buying in private bank names, and that trend seems to continue in today's market as well. So the flow seems to be a bit of moving towards the defensive names and towards the banking stocks. There is a small MOC basket buying in some select mid-cap names in today's market. So maybe some selective stocks might have a bit of an impact, but it's going to be very small and very selective. So not much to read into that. But clearly, from a flow perspective or from a positioning point of view, looks like there is a bit of caution out there. The broader markets have relatively underperformed in the last couple of days, and even the breadth seems to be quite weak as well. So I guess all eyes on the Fed outcome tonight, which can have a big impact on the Indian markets as well. But to go into the big event, there is a bit of caution clearly in the broader market stocks.
No, absolutely. So I guess let's see how this one plays out. In terms of individual names and news flow, buzz, what's the chatter like today?
Well, so the first name on my list is Samudra Motherson. Big move in that name. Post the QIP closure, there has been a bit of interest as well. I guess there is a very strong demand in the QIP issue. And additionally, the street is anticipating a corporate development very soon. Potentially, the company can bag a large order to enter the electronic manufacturing space. That's the buzz as far as Samudra Motherson is concerned. The second name is Hindustan Construction. Been quiet in the last couple of days, been just consolidating in a very narrow range, but looks like the company is likely to raise funds by QIP very soon. I understand the roadshows have started, and potentially the QIP will happen before the second quarter running. So that's something on Hindustan Construction. The third name is Ola Electric. Big move in that name as well. Stock was locked at 10% upper circuit. Yesterday, there were a couple of initiating reports as well. Even today, the volumes are on the higher side. There are very strong buy flows, and some leading domestic mutual fund is quite active buyer, is what I understand, in Ola Electric. And the last is Imami. Within the consumer name, this is quietly underperformed in the last few days. This month, the stock is down 10% from recent highs. And for the third day running, I understand there are very strong sell-offs. So looks like some bit of profit booking is happening from institutional investors in Imami at current levels.
Thank you. Interesting list as always. And now it's time for HCC to tap the capital markets and look at some fundraising. Thank you very much for that. Mitesh is back with us for a few BTST calls. Mitesh.
Yeah. So Nestle, I think, has perked up very well right now. That's VTSC with a stop at 25.80 for targets of 26.30, 35, and maybe more, because the chart pattern does look more bullish to me. And SCVT on LTTS, it's broken down given a pullback, but the structure remains weak, and disclaimer that I have some put options positions over here, so there's vested interest. This is STVT with a stop at about 55.11 for targets of around 54.30.
Okay, sell L&T Technology and buy Nestle. Those are some trades. But let's now focus on a CNBC TV 18 exclusive where sources tell us that Nazara Tech is likely to do a fundraise. Rachna joins in with the details. Rachna.
Right, there's yet another fundraise happening at Nazara. And as sources have told CNBC TV 18 that this time the company is looking to raise about 800 crores. And this time too, it is looking to raise from its existing capital of investors and shareholders. Now, Nazara has been on an M&A spree. Just this fiscal year, we've seen 3 big acquisitions happen at Nazara. The latest one being Pokerbazi, which was at a deal value of about 900 crore rupees. Though that was a part equity, part cash deal, it is that our sources tell us that with this new fundraise, Nazara is looking to use this new fundraise capital to pay for Pokerbazi, a part of it at least. Apart from that, Nazara is looking to foray into the offline entertainment business and publishing business, and that is what they are looking to invest this 800 crore that they're looking to raise right now to get into. Now, talking about the offline entertainment business, it was just last month that they received an LOI from the creditors of committee of Smash Entertainment, which is a Sachin Tendulkar-backed company. Apart from that, the company is looking to get into the publishing business, and that is exactly what this newly raised capital will be focused towards.
Thank you very much for that. I remember just the last conversation we had after they made that near 1,000 crore acquisition of Pokerbazi, where Nitesh Mittal Sen told us that this acquisition will be funded partly by the cash that they have, but they will also look at some other fundraise, though they didn't commit to a timeline. But as Rachna pointed out, they are looking at a fresh fundraise and 800 crores via the pref issue. In the last pref issue, the Kamath brothers had put in money in their personal capacity. Mayuresh Joshi, head of equity research at William O'Neill, is with us on the show. Mayuresh, lots of fundraise taking place at Nazara and lots of acquisitions.
Afternoon, Rima. Yes, I think the markets are abuzz with a lot of fundraise news that is probably happening at this juncture. But for Nazara Tech in particular, I think they have been on a string of acquisitions in the past few quarters. And therefore, I think how these activities probably play out is something to be probably seen, specifically in terms of this inorganic growth journey. So I think how the execution probably takes place over the next few quarters is something to be watched out for. The second aspect, obviously, is related to the indirect tax notices that the company had received. So to that extent, what really comes out, positive or negative, is going to have a call, is going to have some kind of action on the stock itself. Last but not the least, I think the numbers have been pretty steady so far. Balance sheet is relatively strong. Working capital cycle is relatively strong. And therefore, I think these two triggers, one in terms of the acquisitions that they're probably doing, whether they can lay path to a very strong earnings growth in the next few quarters, and two, the execution in terms of their acquisition and the synergies thereof, and how they probably play on the balance sheet is going to be equally.
Okay, Mayuresh, stay on. We'll come right back and have some more questions for you. Quick break, and we'll be back with the market close. $50 lakhs also. So it is a benefit given keeping in mind the poor, the middle class. But it will apply to anyone who's got higher. Naturally, that's the law of the country, and that's the a common sense argument. So that benefit given to a middle class will also fill in into everybody's income who's in the higher net worth also. So that is why the exemption, standard deduction, has been increased, which will be only for the salaried class. So we are looking at various ways in which the middle class will be given the benefit, and the higher net worth are not getting benefit because of that, and therefore, we let them go simply. That doesn't happen.
So the ways in which we are bringing these reductions to benefit the middle class are being carefully looked into, and only then we are taking a call. And now, up to 7 lakhs, there is no tax to pay.
CNBC TV 18, an unending pursuit for excellence. A pioneer, a leader, a visionary, building a lasting legacy of credibility, consistency, and trust. Giving unparalleled access to global thought leaders and powering conversations that are shaping the new world order. Setting the highest standards through exemplary leadership. It is this unrivaled reputation for the most comprehensive coverage, actionable intelligence, and in-depth reporting that makes CNBC TV 18 India's #1 business news brand. Foreseeing change, growth, and transformation for over a quarter of a century. Trendsetters crafting innovative content formats. And award-winning business journalism. On air, online, on social media. As we embark upon 25 years of excellence, we invite you to be a part of our future.
Welcome back. 7 minutes to go for the markets to close, and now some IT stocks are showing some signs of a recovery. Pull up a First Source. First Source is down 1.5%, but from the day's low, it's recovered close to about 3.5–4%. First Source is the one we're talking about. Even as Saskian Technology is seeing a little bit of a lift. From the session lows, it's up close to about 1.5%. And in the large cap names, HCL Tech has managed to trim its losses marginally. We've been in conversation with Mayuresh Joshi. Mayuresh, anything that you've picked up in IT which explains this kind of nervousness? And is it just like tactical positioning, sector rotation taking place away from IT and banks? And will it continue this shift away from IT into, say, banks which have underperformed?
I think two things. One, I think the commentary which came through late night last night from Accenture, I think that created a little bit of jitters in terms of the prospects, specifically for this quarter and the rest of this calendar year, in terms of growth dynamics and vectors being played and laid out. Having said that, if you probably look at a lot of management commentaries, Rima, specifically for mid-cap IT companies, vis-a-vis the large-cap IT companies, the mid-cap IT companies' commentaries have been far more robust. A lot of managements have indicated steady state, constant currency and dollar revenue growth. They're also expecting the kind of expenses that have gone up, specifically the outsourcing expenses, to probably normalize in the next few quarters as well. Again, salary hikes will be part and parcel over the next couple of quarters for respective companies. And therefore, I think the EBIT margins will gestate the salary hikes that take place within the system itself. But generally, I think the commentaries are indicating for robust order flows, execution, and therefore margins remaining extremely stable as well. What probably happens in terms of the rate cut cycle, US elections, is also something that is causing a little bit of jitters. As if the US economy, as some aspects of the market are indicating, is not fully equipped to probably cater to demand, and whether demand is genuinely slowing down in key sectors like BFSI, retail, manufacturing, that might have toll in terms of future order flows. So I think a combination of these factors probably playing out. But our take still remains the same. Mid-cap IT might continue outperforming in terms of numbers compared to large-cap IT. We continue holding stocks like a Persistent and Wipro in our global.
Okay, by the way, some fertilizer names are seeing some action. We highlighted RCF, NFL. About 10 minutes back, they were showing some incipient signs, some early signs of a recovery, but now it's getting full-blown. RCF is up 3.5%. Even a Nagarjuna fertilizer, it's a 2.5% gain over there. A couple of these PSU banks like IOB have come in for some amount of buying interest. Getting back to the agri side, Himmat Singha Seed too is now seeing some interest.
That's fertilizers, and I also was checking some other commodities as well. Oil prices, by the way, intraday have slumped quite a bit. I mean, nervousness in a lot of asset classes, including the oil markets. So you're seeing Brent down a little over 1.5% right now. It's again fallen below 73. And that's, NYMEX is down almost 2%. So again, all asset classes nervous ahead of this big announcement. It's showing up in stocks like Oil India, where there was actually good news with the windfall tax being lowered to zero. But I think the market seems to be reacting a lot more to the immediate sentiment around oil prices as well. So pull up stocks like Oil India or ONGC, fair amount of pressure there on some of those names as well. Mayuresh is still with us. Mayuresh, any thoughts on the upstream oil names?
So, I think a large part of their variable does depend in terms of how oil pricing is. And therefore, I think if oil prices are on a downward spiral, even if volumes compensate for that, a large element of pricing being not in their favor does not probably get reflected in numbers if oil prices are expected to stay this way. The second aspect, obviously, is in terms of a lot of the exploration needs that will now get fulfilled. Because if you probably look at the oil minister's statements, should be they're expecting a huge amount of capex, both from the ministry end as well as from the PSU enterprises, to probably have a lot of these exploratory wells being starting to dig in, both for oil and gas, and therefore taking the entire acreage area from 10% to 16% over the next few years will entail a huge amount of capex. So I think that will also have some element of impact as far as cash flows are concerned. So to that extent, I think things might remain a little bit volatile. Even the Singapore GRM prices should be, as an example, have gone down. I mean, fallen off the cliff. And therefore, I think how OMCs will also report numbers, specifically when it comes to the refining part of the business, is to be seen. The only positive statements that come from the balance sheet for most of these upstream companies is the dividend yield that they probably present. But again, I think on a case-to-case basis, our take is that we remain neutral on this sector, at least at this stage.
Okay, just winding down to the markets closing, and we're going to close with cuts. So down about 66 points on the Nifty. The Sensex is down close to about 192 points. The Nifty is ending at 25,350. So ending in the red ahead of the big Fed decision. The cuts are not much, but the second half of the trading session turned out to be volatile. In the morning, in the beginning, the markets in fact went on to hit new lifetime highs. On the way down, it was all about IT and the weakness there. Accenture has changed its promotion cycle and moved it forward by 6 months. That spooked the sentiment in Nifty IT, and plus some profit booking considering the 30% return in the last 3.5 months. So IT under pressure, including all frontline IT names. Other than that, you had banks, which did very well. So banks fought for the bulls. The Nifty Banking Index ending with a gain of near 1%. Shriram Finance was the top gainer, followed by Bajaj Finance, FinServ. Large banks like ICICI Bank and HDFC Bank also clocked in a gain of about 1.5%. PSU banks not left behind with a 1% up move. So money moved out of IT today and into the banking names, but mid-caps on the whole were a bit subdued today and underperformed the front line.
Yeah, absolutely. And some examples would be a Blue Dart down 8%, JM Financial 5%, Zaggle 4.5% lower. You had names like, of course, Midcap IT, Memphis, Oracle Financial, L&T Tech, Persistent. A lot of these names were under pressure today. Biocon lost some ground as well. So these are some of the names on the lower side. But having said that, I mean, you had some stocks popping out on the top side of the screen as well. Look at a Torrent Power, 8.5% up. Look at, Bikaji, which is up about 6%. And some of these stocks from the chemicals space, for instance, alkyl amines, continue to have a good session. Moti Sons Jewelers, one of the smaller jewelers, about 8% higher. So in different shades, but yes, all things put together, negative advance decline ratio and an underperformance on the mid-caps today.
Graphite, HEG were the other two big movers. I think one of the companies has raised prices of graphite electric, so that's pushed up these stocks. And BSE, what a big move it's had today. 15.5% higher on BSE, and Reliance Infra was up 20%, locked in an upper circuit. There goes the bell. and it's a close just shy of the 25,350 mark, down 73 points. But it's going to be an action-packed night. At 11:30 p.m., the much anticipated the Fed decision will be out. Will we see the first rate cut after 4 years? And what will be the magnitude of it? 25 basis points or 50 basis points? Interesting night coming up. But we're going to wrap up on closing bell. From the entire team, thank you for watching. Don't go anywhere. Markets Forward comes up next.
CNBC TV 18, your trusted partner and investment ally.
ডিমান্ড ছিল তার মধ্যে ফার্স্ট ডিমান্ড তো ইনভেস্টিগেশন সিবিআই ওটা তো অলরেডি সিবিআই করছে এবং সুপ্রিম কোর্ট মনিটরিং করছে ওটা নিয়ে তো আমাদের হাতে নেই প্লাস ওদের চারটে ডিমান্ড ছিল চারটে ডিমান্ডের মধ্যে যেটা ছিল যে মেল ওরা আমাদের করেছে একটা হচ্ছে তিনটে নাম দিয়েছিল ফ্রম হেলথ ডিপার্টমেন্ট একটা ডিএমই একটা ডিএইচএস আর একটা হেলথের প্রিন্সিপাল সেক্রেটারি আমরা ওদের বোঝালাম যে একসাথে যদি পুরো ঘরটা খালি করে দেওয়া যায় তাহলে অ্যাডমিনিস্ট্রেশনটা চলবে কি করে সুতরাং আমরা ওদের কথা মতো ডিএম এবং ডিএইচএস কে সরাবার সিদ্ধান্ত নিয়েছি এবং তাদের সম্মানজনক ভাবে এর থেকে উঁচু পোস্ট ওদের আর কিছু হয় না সব কথা তো আর মিনিটসে লেখা যায় না কিন্তু ওরা চেয়েছে বলেই বিনীত ওদের কথাটা মেনে নিয়ে আমাদের রেসপন্স করেছেন জানিয়েছেন তাই তিনি হয়তো শিপি থাকবেন না যতক্ষণ পর্যন্ত নোটিফিকেশনটা না হচ্ছে নতুন শিপি আসবেন আপনাদের সকলের সহযোগিতা কামনা করছি অর্থাৎ চারটে পয়েন্টের মধ্যে তিনটে পয়েন্ট আমরা কিন্তু মেনে নিয়েছি
The Lal Street consolidates after the Nifty and Sensex hit record highs intraday. IT stocks remain a major drag. Midcaps underperform, but banks buck the trend. The Nifty bank ends over 1% in the green.
Global cues weigh on the Indian IT stocks, and the IT index falls over 3% after hitting record highs just yesterday. It's Accenture's 5% decline overnight in the US and the US Fed rate decision later tonight that hurt sentiment. Infosys, TCS, Wipro, all of them fell anywhere between 2 to 4%.
Bajaj Finance rallies 3.5% after Morgan Stanley issues an overweight call with a target price of 9,000. The brokerage says the stock is attractive at current price with a holding company discount of 20% for Bajaj Housing Finance. Hello and welcome to Markets Forward, your go-to show where we aim to get you all the key data points and gear you up for the next trading session. And tomorrow is going to be a big one with the Fed rate decision. I'm Reema and with me is Manglam. Hi.
Hi, Reema. You know, what a day it was today, a tug of war between the IT and the banks. We've got you covered for the next 20 minutes with all the big news and the key developments on D Street today, top corporate voices, and all the events that you need to track ahead of trade tomorrow as well. So let's kick off the day by the market action. Rima, what a day it was.
Well, it started off with a lot more promise. So in the morning, the Nifty went on to hit new highs of 25,482. But by the end of it, we closed with minor cuts. So the Nifty and the Sensex down close to about 0.1, 0.2%. The Nifty lower by 40 points, closing above 25,350. The second half of the trading session turned out to be choppy. At about 12:45, there was a wave of selling pressure. There were a few key trends which emerged. One, IT saw severe selling pressure and profit booking. The Nifty IT index ended with a cut of more than about, close to about 3-odd%. Secondly, banks did very well. There was a flood of money which perhaps moved away from IT and some of the other sectors into banks. Banks have been underperforming and banks were the key outperformers. And thirdly, mid-caps underperformed today. The mid-cap index was down 0.7%. The small-cap index too under pressure with a negative advanced decline ratio.
Absolutely. So two things really stood out for me. Apart from the advanced decline ratio that you mentioned, for the second day running, we've had nearly 1,500 to 1,700 stocks decline on the bourses with a relatively much smaller number of stocks which are advancing. So those lines, yesterday's line wouldn't be very different from today's line as well when it comes to the crisscross lines as well. The second thing that stood out for me was the way India VIX moved in the second half of trade in particular. So the intraday chart of the volatility index comes up for you. It had seen a major decline all of last week when the markets were doing extremely well. The street was, not fearing any sort of volatility in the market. But ahead of the event, it was understandable that volatility increased as well. So it's back above that 13 mark. On the Nifty Bank, which was outperforming for most part of the day, at some point, it went perilously close to that 53,000 mark as well. But that is a mark that it couldn't cross formidably, largely because it was Nifty Bank weekly options expiry today. And a lot of call writers were positioned themselves at the 53,000 mark itself, telling you that maybe that's a bit of a near-term hump for the Nifty Bank. And eventually, it had the IT index, which weighed higher on the markets, and as a result of which the Nifty sold off from that 25,450 odd levels as well. But not a big cut is what we saw, give or take everything. The Nifty ended with cuts of about 41 points, and the Nifty Bank did a lot better. So the IT index could not undo a lot more than what the Nifty Bank did.
Well, difference in weightage, right, between IT and banks. So it takes a much bigger cut in IT to compensate for the increase in banks. But on the whole, you would say today was a session of consolidation. Let's also tell you what we have for you on our show. We start with the top movers and shakers of the day. Vivek is going to be with us. We'll talk about the sharp decline seen in IT stocks, and Bajaj Finance was amongst the top gainers. HEG and Graphite India in the mid-cap space also stole the spotlight, with HEG rising close to about 8%. And we'll also delve into the key market events to watch out for. But to kickstart the show, it's over to Vivek now for the top movers of the day. Vivek.
Well, thank you so much for that. A day, like you mentioned, you actually saw some of the financials do very well. So the first set of stocks that we look at are actually the financial banks. Both banks as well as select NBFCs today saw quite a bit of buying. So look at names in the top, 3-4 names as far as the Nifty gainers were concerned. All of them belong to either the banks or the NBFC pack. Shriram Finance, Bajaj Fin, even Bandhan Bank, ICICI Bank for that matter, doing very, very well. The next stock on our radar is Samvardhana Motherson. Remember, this particular company is amidst a QIP fundraise, and like we mentioned before, the fundraise has garnered significant interest, and today the stock doing very well, almost 4.5%, and has continuously been doing well, at least in the last 4 to 5 trading sessions. The next stock on the radar is BSE. Now, over the last 3 to 4 trading sessions, the stock has gained almost 30%. And along with that, other exchange stocks too, like MCX as well as IEX today, did quite well for themselves. Torrent Power was another stock on the radar. Remember, the company received an LOI, Torrent Power is the one that we're discussing. Company received an LOI, as far as getting pump storage capacity was concerned. And on the back of that, that stock did quite well. And also Graphite electrode stocks. So names like HEG as well as Graphite, both of them did quite well in the session. Graphite prices were hiked by large global peer. On the back of that, some rub-off as far as the domestic companies were concerned. But on the other hand, a few laggards as well. Like you mentioned, the entire IT pack today took it on the chin. Amongst the mid-cap IT were the ones that saw the most selling pressure. Names like OFSS, Emphasis were the ones that took it on the chin the most. Also, pharma stocks today saw quite a bit of selling pressure. So names like Glenmark, Abbott, Laurus Labs, all of them witnessing some profit booking. Pidilite, this particular stock today fell quite significantly. Large volumes were also witnessed over there. And the other stock that saw quite a bit of selling pressure was Container Corporation. Amongst the broader end of the market, this particular stock too, especially in the last hour of the session, saw quite a bit of selling pressure.
All right, Vivek, thanks a lot for that. Pidilite perhaps on account of increase in crude prices from sub-$70 levels, sub-$70 per barrel levels to now back up to $72 per barrel. We'll keep an eye out on all these stocks. Let's also welcome our guests for the show. We have Mayuresh Joshi of William O'Neill and Ruchir Jain of 5paisa.com, both of them joining in as well. Thanks a lot, gentlemen, for joining in. Good afternoon once again. Mayuresh, I wanted your thoughts in particular on these graphite names, HEG and Graphite. Both of them did extremely well in today's trading session. Do you have a view?
Afternoon, Mangalo. No, I think two aspects here. One, again, I think the capacities that they have built up so far. I think the utilization was not happening because of the down cycle that we've probably seen at this juncture. But 2-3 important aspects that might now start getting played out for these graphite electrode players. One, I think the entire green steel concept that Europe and the rest of the globe is probably embarking upon. And therefore, I think as these players are far more efficient in terms of producing green steel, I think these players will remain in focus as more opportunities start coming their way. Second, I think needle coke prices have remained extremely stable for the last few quarters. And with that aspect, as demand slowly and steadily starts coming back for green steel as the main moving component for these players, with stable input costs, there is high expectation or large expectation in terms of margin improvement expected to happen. And third, I think in terms of the overall utilization level itself, as these start coming back to normalization levels, operating leverage shall start kicking in. So I think based on these three factors, I think the momentum of these stocks are probably there.
Okay, Ruchir, comment on the market action today. What did you make of it? The strong start, then the sell-off, then sort of a recovery or consolidation, and any stocks that you have on your radar for tomorrow for trade?
Yeah, hi, very good afternoon, Nima. Well, in fact, if we see the index in last 4 trading sessions, the index is consolidated within a range. Maybe, market participants are too looking for the event outcome, which we will see tonight. But the good thing is that in this entire consolidation, the important supports have not been breached. 25,200 to 25,100 is a very strong support range for the Nifty. Until that is intact, I think the broader trend still continues to remain on the positive side. So until we see any kind of supports getting break, I think overall trend remains positive, and it's better to trade with the direction of the trend. As far as index levels on the higher side are concerned, 25,500 would be the breakout level, which has not been taken out since last 3-4 trading sessions. If it manages to surpass that tomorrow, then I think 25,700, 25,800 could be seen. Now, to play this up move, I think a couple of recommendations, which a couple of stocks which are looking good from here. One would be IEX, and the entire platform stocks are doing well, and IEX recently have seen a price up move which has been supported by very good volumes. So I think here we would see a continuation of the momentum. So one can go long on IEX with stock below 218 for potential near-term targets around 240. And Nestle is another stock where relatively a low beta name, but in case if the market turns volatile, then I think Nestle would be one stock where we could see some good stability. We have seen a good time-wise correction over last few months, and there could be some up move based on today's price action. So Nestle short-term traders can look for buying opportunities over here with stock below 2,540, expecting targets towards 2,700 soon.
All right, Ruchir, thank you so much for joining in and chiming in on your views on the markets. Nestle will be very interesting to see how they sustain their margins here, because we remember Manisha telling us how prices of coffee and cocoa are back again on the rise. So will they be able to sustain those margins at current levels or not is something that we'll keep an eye out on. But it was the IT sector which was the sector of the day. The IT stock saw a decline ahead of the Federal Reserve's rate decision and some overnight news coming in from Accenture as well. Prima, what took place?
Well, there are 4 reasons. 1, nervousness ahead of the decision. 2, profit booking, considering the IT index went up 30% in the last 3.5 months. And just yesterday, it was at an all-time high level. 3, the Accenture news flow about the company permanently shifting its promotion cycle from December to June. So moving it forward by 6 months also spooked sentiment, because in a way, this analyst read it. It's the challenging environment which made the company push it forward. And the fourth is the management speak. So that LTIMindtree report to Citi also said, this is what the company, LTIMindtree, had to tell Citi when they met, that Q2 is going to be similar to Q1 in terms of growth rates. Discretionary demand has not picked up. It still continues to remain a large part about cost takeout. And although there are green shoots in the environment, it's not that the order booking is going to be significantly better. The pipeline is similar to what it was in the past. So these are the four reasons why you saw IT stocks perhaps see some amount of nervousness ahead of the big event. And particularly, Mayuresh, while in the frontline pack, you had a TCS, HCL Tech, Infi lose ground. In the mid-cap space, it was Emphasis and Oracle Financial Services, OFSS, where we saw bigger cuts. Come in on the kind of selling that we've seen in IT. I know you like some of the mid-cap IT names, like Persistent Systems. These are stocks that you like. But for any of the large cap, would you look to sell, considering you prefer mid-cap?
I wouldn't sell, Rima. And obviously, I think all the reasonings that you put forth are absolutely valid. So to that extent, I think the expectation now that is largely, I think, laid out is the second half of this financial year is where I think consumer discretionary patterns will start evolving once again. And there is hope that if things stabilize and they don't worsen out, as some reports are suggesting as far as the US economy is concerned, retail, manufacturing, BFSI, which become the forefronts for most IT companies that they operate out of, areas that they operate out of, should start coming back. Also, Europe as a region, Rima, is showing some signs of green shoots as well. So I think as Europe as a zone also start showing some amount of improvement in the second half in these key areas and regions as well. My own sense is that there should be some gradual recovery that probably starts happening for large cap IT companies. I think the only issue for large cap IT companies is these multi-million, billion-dollar deal wins. How can they come through? If they come through, how sustainable they are? Is there any pricing pressure that is probably being seen? So we are adopting a wait and watch approach for the large cap IT names like this.
All right, wait and watch. Roger, your thoughts on IT? I mean, chartically, is there anything that stands out for you?
So as Rima said a few minutes ago, that in last 3.5 months, the IT index has itself rallied significantly. At the start of June, the Nifty IT index was around 31,500 and we are now above 42,000 in spite of today's correction. So I think the momentum readings are overbought, and such overbought readings get cool off with some either price-wise correction or a time-wise corrective phase. Now the minimum retracements, if I take out of this entire move, then that gives a potential targets around 40,700 where support would come in. So still we are above that 42,000 mark. So I think I would wait for some dip before entering fresh longs in the IT. Maybe around 40,500, 40,700 if the Nifty IT index comes. Those would be good levels where again some contra long positions should be taken in this sector.
Okay, the other big story is Bajaj Finance, right? A near 4% up move. Morgan Stanley has raised the target price to 9,000.
Yes, everyone is looking at Bajaj Housing Finance and they're saying why bet on Bajaj Housing Finance when you can bet on Bajaj Finance itself. So the template is pretty clear, you know, after a stellar rally that we've seen from its issue price on Bajaj Housing Finance, which by the way was under pressure in today's trading session after rallying nearly 2.5 times from its issue price. The street was looking at the overall SOTP of the holding company, which is Bajaj Finance, then ascribing a bit of a holding company discount to Bajaj Housing Finance. And what remained of that, they were looking at Bajaj Finance as a valuation, a function of the valuation for Bajaj Finance itself. But that's exactly what Morgan Stanley did as well. They updated their model after the Bajaj Housing Finance IPO. Bajaj Housing Finance at current price trades at around 6 times 2-year forward price to book. And if you give it a 20% holding company discount, strip that off the current market cap of Bajaj Finance, then you're left with an amount which actually implies that Bajaj Finance's core business is trading at 3.6 times 2-year forward earnings, which is slightly more attractive than the 4.5, 5 times that it would be trading at earlier. And as a result of which, they were positive on Bajaj Finance. Target of 9,000, maintaining overweight. Just two variables here, Rima, you know, for all the brokerages that are talking about Bajaj Housing Finance and the attractiveness of Bajaj Finance because of that. One, it assumes that Bajaj Housing Finance will continue to rally. A large part of the rally is also because of low liquidity. And secondly, the holding company discount, which is still a very subjective thing. A lot of people are giving it 20%, some may give it 25%, some may give it 30%, some may give it even 10%. So depending on these two variables, the way the ball moves on these two, one will look at Bajaj Finance basis the valuation of Bajaj Housing Finance.
By the way, even Bajaj Holdings and Investments, the company with the group holding company for both the brothers, Rajiv Bajaj and Sanjeev Bajaj. So it has even a Bajaj Auto, I think Bajaj Consumer, a slew of Bajaj Group companies. That went up by nearly 4.5% today. And this one has outperformed some of the other peers. So this year, Bajaj Holdings is up 40%, while FinServ is only up 12%. Finance is up 4%. But remember, it has Bajaj Auto, and Bajaj Auto itself has done very well this year.
Even Maharashtra Scooters is the other holding company of the Bajaj Group company. And out there, I'm not sure of the holding of Bajaj Finance in that, but that too has rallied about 60% this year. A large chunk of their holdings come in from Bajaj Auto, like you said, which has done extremely well. So these holding companies are now actually finding some favor.
But still, one of the investor who holds Bajaj Holding is saying it's still being offered at a 50% discount to.
Like I said, the
right?
holding company discount is such a subjective thing. Some are offering it 25%, some 50% as well.
But let's move on and talk about HEG and Graphite India. One of them went up nearly 8%. This is after Resonac Graphite, one of the world's biggest graphite electrode manufacturer, announced a minimum 20% global price increase on all new graphite electrode orders. Nigel joins in for more. Nigel.
Well, that's correct. HEG as well as Graphite India, both of them are higher in today's trading session. The key reason is a couple of days ago, on September 9th, a big global player, that's Resonac Graphite, they said that they're going to be increasing pricing by around 20% on all new orders. Now, why is this company important? Well, it's the erstwhile Showa Denko, and they have roughly around 25 to 30% of the total global market share. So a couple of factors to track. How much of this 20% price increase on all new orders will be accepted? So that's something we need to track. But the bigger positive is, after graphite electrode pricing declining over the last few quarters, well, it seems it's got some kind of a base.
Right. Thank you for that, Nigel. We've heard Mayuresh's view on this as well. In fact, on that note, we'll take both Mayuresh and Ruchir's leave. Thank you so much, gentlemen, for joining in and giving us a view on the markets and a lot of individual stocks. Let's talk about some corporate communication that we had from the companies this morning. Happiest Minds, the stock on our radar. The company said they're on track to achieve FY25 guidance of 35 to 40% in terms of revenue growth, 20 to 22% on the margins as well. They said wage hikes effective from July and fewer working days will impact the second quarter margins, but that's already accounted for in their guidance. They added that their Gen AI business is scaling up well, with 50 active conversations last year and 10 new conversations in the first 1.5 months of this quarter itself.
Next, Suprajit Engineering guides for double-digit growth with margins of 12% for this year, and they expect FY26 revenue growth to be even better. They also say margins for Suprajit Controls will be in double digits in 1 to 2 years, and SCS acquisition could turn EBITDA positive.
And lastly, we had Ease My Trips CEO Prashant Pitti join in and said that they will be incubating new businesses and lend them expertise with an eye toward potentially listing some of these companies in which it has acquired significant stakes. Also, certain investments which they've made are strategic in nature to boost the company's current business itself.
Get into a break on that note. We'll come back and get you the big event for tomorrow, the Fed decision.
আমরা নিজেদের থেকেই যেহেতু ওই দিন সিপি পৌঁছবার আগে নর্থের ডিসি পৌঁছেছিলেন আগে এবং 14 তারিখে ঘটনাটা ঘটেছিল এবং ওরা অভিযোগ করেছিল, যার জন্য নর্থের ডিসিকেও সরিয়ে দেওয়ার সিদ্ধান্ত হয়েছে। ওখানে কাকে দায়িত্ব দেওয়া হবে সেটা কালকে ডিসাইড হবে। এছাড়াও সেফটি, সিকিউরিটি, হসপিটালের ডেভেলপমেন্ট, ইনফ্রাস্ট্রাকচার গুরুত্ব দিয়ে দেখা হবে এবং এক্ষেত্রে টাইম টু টাইম যদি কোনো প্রবলেম অ্যারাইজ করে চিফ সেক্রেটারির আন্ডারে একটি কমিটি বানিয়ে দেওয়া হয়েছে, যেখানে চিফ সেক্রেটারি নিজে দায়িত্ব নিয়ে ওরা যদি কথা বলতে চায় চিফ সেক্রেটারি, হোম সেক্রেটারি, ডিজিসিপি থাকবেন, তারা তাদের বক্তব্য জানাতেই পারেন।
Welcome back. You're watching us here on Markets Forward. The most important event to watch tomorrow will be the outcome of the US Fed that comes in tonight, and the street will react. D Street will be reacting to it tomorrow itself. We've wondered whether it's a 25 basis points rate cut with a dovish commentary or 50 basis points rate cut with hawkish commentary. For all of that, what the street is making of, let's go across to Steve Leisman, who lays out all the possibilities.
Well, Fed is the headline event, but what else other than that you need to watch? Sonal joins in for that list. Sonal.
Well, yes, Fed is something that will take all the action and all the attention tomorrow. But other than that, of course, we have a lot of events we'll be watching out for. In terms of economic data, we have existing home sales for US, initial jobless claims. Other than that, we'll also be watching out for unemployment data from Hong Kong. In India, we have AGMs from Vardhman Special Steels, Johnson Controls, Snowman Logistics, Garware Technical Fibers, Vardhman Textiles. The list is really long. It will come up for you on the screen. At the Jefferies India Forum, Mahindra & Mahindra Limited will be participating. For Kotak Healthcare Forum, Metropolis Healthcare and Aster DM will be participating. And dividend ex-date for a number of stocks. I have mentioned the most important ones there. Something like a GSPL, MCX, Neogen Chemicals, Steel Authority of India Limited, Shalby as well. So these are some stocks that should be on your radar.
Right, Sonal, thanks a lot for that. With that, we wrap up on this edition of Markets Forward. Thank you so much for watching. We'll be back tomorrow with more news and updates on the markets. And on the other side, a lot of news and updates continue on CNBC TV 18.
एक चीज ये समझने की कोशिश है कि और जो बोल्ड रिफॉर्म्स है, जैसे वन नेशन वन पोल जो कि प्रधानमंत्री ने जिसके बारे में बात की है, क्या इसको आप आगे बढ़ा पाएंगे इस सरकार में?
इसमें कंसल्टेशन पूरे हो चुका है जी। और इसमें ये भी है, जनता मान रही है कि खर्च इतना हो रही है, साल भर हो रही है, हर राज्य में हो रही है, पंचायत के स्तर पर हो रही है, फिर भी इन सब का असर दूसरे एक विषय है जिसमें हम सब ध्यान देना चाहिए। हर चुनाव के 3 महीने पहले और 3 महीने बाद तक रिजल्ट आने, 3 महीने नहीं, रिजल्ट आने तक कोई डेवलपमेंटल एक्टिविटी उस एरिया में नहीं हो पाता जी। देन यू सीक परमिशन फ्रॉम इलेक्शन कमीशन, ये प्रोजेक्ट तो पहले से है, इसको चलने दीजिए, वो एडमिनिस्ट्रेशन का एक और हिस्सा बन जाता है। इसीलिए ऐसे डेवलपमेंटल एक्टिविटीज का रुकावट बार बार होना और हर चुनाव का उनके स्तर पर खर्च उठाना, ये सब नेशनली अवॉइडेबल एक्सपेंडिचर जी। इसीलिए वो आइडिया का इनपुट इतने सारे और एक उच्च स्तरीय कमेटी के द्वारा, पूर्व राष्ट्रपति जी के कमेटी सुझाव आए हैं, जरूर इसको आगे बढ़ाना चाहिए।
सरकार कमिटेड है, इसको आगे लेकर जाएगी,
देश के हित में जरूर करना ही है।
एक नेशन वाइड कास्ट सेंसस की भी बात ऑपोजिशन ने बहुत की थी चुनाव के समय में, सरकार का क्या मत है इस पर?
इसमें पहले से हम बोल रहे हैं और बजट के समय में हम उसके साथ चल रहे हैं, हम उसके खिलाफ है, इस विषय से मैं ताल्लुक नहीं रख रही हूँ अभी, सिर्फ इसीलिए मैं बोल रही हूँ बजट के द्वारा, इंटरिम बजट के द्वारा हमने स्पष्ट ये बात बोले, 4 ऐसे कास्ट हैं जिसके ऊपर ध्यान देना चाहिए, किसान, गरीब, महिला और युवा। सो इन चारों को हम अगर प्रोत्साहन देंगे, इसमें हर जाति शामिल है, हर जाति को आगे बढ़ाने के लिए इस रास्ते पर चलने में हम उस नजरिया से डेवलपमेंट को प्रायोरिटी देंगे, ना कि डिविजन बिटवीन वन कास्ट एंड अनदर। इस रास्ते पर माननीय प्रधानमंत्री जी ने वोट ऑन अकाउंट बजट में ही हमने इसका स्पेसिफिकली मेंशन भी किया है.
I would still wait and watch, because while the recovery will be there, I think it will be gradual. It will not be back to double-digit growths of the past very quickly, and for a couple of reasons. I think the recent weather phenomena impacting rural with drought in May, June, and then excess rainfall. I think that's part number one.
Hello and welcome to Business 360. I am Ashmit Kumar, and here are the headlines that we're tracking this evening. Sensex and Nifty give up gains after hitting record highs in early trade. Nifty ends below 25,400. IT stocks drag. Financials buck the downtrend. Investors await the first rate cut from the US Fed in 4 years. Later tonight, a CNBC survey shows 84% of market participants expect a 25 basis point cut, and only 16% are expecting a 50 basis point cut. 9 people are dead and nearly 2,800 injured after pagers carried by Hezbollah operatives explode simultaneously across Lebanon. Israel planted explosives inside 5,000 pagers imported by Hezbollah a few months ago, according to a Reuters report citing sources. Israel is yet to comment on these explosions. Prime Minister Modi will visit the United States later this week to attend a Quad summit and address the UN General Assembly. Republican presidential candidate Donald Trump says that he will be meeting Prime Minister Modi, calls him a fantastic man, but criticizes India as a very big abuser of trade ties. Zee Entertainment refutes Star India's claim, seeking damages worth nearly 8,000 crore rupees over sharing cricket broadcasting rights for ICC tournaments. Star India has filed a case before the London Court of International Arbitration. %50 voter turnout in Jammu and Kashmir till 3 p.m. as 24 seats go to polls in phase 1 of the assembly elections. 219 candidates, including 90 independents, are in the fray. The National Conference and the Congress are in an alliance, while the BJP and the PDP are contesting solo. Union Cabinet makes a push for simultaneous elections, accepts the proposal tabled by a high-level committee led by former President Ramnath Kovind. Cabinet provides big fillip to space exploration, approves expansion of Chandrayaan-4 moon mission and setting up an Indian space station, also approves the Venus orbiter mission, clears 8,200 crore rupees to develop a new reusable launch vehicle. Fresh violence in Manipur's Jiribam district, even as curfew is relaxed in Imphal. Schools and colleges reopened and internet restored in the state capital after 10 days. Government halts the fencing work in Kuki-dominated areas bordering Myanmar. Well, let's begin with a quick look of all the market action. The Sensex and the Nifty hit record highs in early trade, but the rally fizzled out and both indices ended the day with marginal losses. IT stocks saw a sharp sell-off with the index losing 3%. This was the worst single-day decline in over a month. On the other hand, financial stocks bucked the downtrend with the Nifty Bank index ending with gains of 1%. Well, speaking of markets, here's a look at the global markets. The markets globally are expecting the US Federal Reserve to begin its long-awaited rate-cutting cycle later tonight, marking its first reduction in 4 years. Now, while there is near consensus that the Fed would definitely cut the benchmark rates currently at its highest level in 23 years, economists and investors are divided on the quantum of that rate cut. According to the CNBC Fed survey, 84% of the 27 respondents, including economists and strategists, anticipate a 25 basis point cut and forecast a more gradual approach to rate cuts. We reached out to some former US Federal Reserve officials to get a sense on what the quantum of rate cut could be.
There is also, though, something that worries me a little bit in that narrative, the notion that maybe the economy is a little weaker than it appears, and this is an insurance policy Last time we talked, there was some discussion that you and I had about, well, gee, is the economy actually weaker than it appears? I fear that if they move 50 basis points, the notion that they know something that we don't know, as they say, i.e. the economy is weaker than we think, will start to take hold. And I think that's not an accurate narrative.
If it was completely up to me and I was just choosing, I would go 50. I'm more worried, a little bit more worried about the downside risk than the upside risk, but it's a very close call. And the point is, an important point is, I don't believe everybody on the Federal Open Market Committee thinks what I just said. I think you still have some hawkish sentiment on the committee, and that could drive Jay Powell to think 25 basis points is the way to hold the committee together, hopefully without dissent at all.
Well, you can catch a comprehensive coverage of the big Fed decision from 11:30 p.m. tonight only on CNBC TV 18. Well, here's the top global story today. 9 people, including a child, have been killed and more than 2,800 people have been injured after pagers reportedly used by members of Iran-backed militant group Hezbollah detonated simultaneously across Lebanon and in Syria. Reports have suggested that at least 200 people are critically injured. Lebanon's health ministry has put hospitals across the country on maximum alert. Hezbollah has held Israel fully responsible and called it the biggest security breach in its war with Tel Aviv and vowed retaliation. Israel declined to comment on this incident. Iran's ambassador to Lebanon is among the wounded, along with 2 embassy employees. Iran's foreign ministry has condemned the detonations as a terrorist operation. The US government has said it was not aware of this incident in advance. According to a Reuters report citing Lebanese sources, Israel planted these explosives inside 5,000 pagers imported by Hezbollah a month ago. A Taiwan-based company named Gold Apollo has been linked to the pagers. The company said that, saying they were not involved in the production, and a Budapest-based company named BAC Consulting manufactured these devices. Gold Apollo claimed that they had an authorization agreement with Hungary-based company for the past 3 years. However, they did not show any proof of this agreement.
I don't have any details to provide on the reports of the pager blast. I can tell you, to my knowledge, there's no U.S. involvement in this at all. Again, it's something that we're monitoring. And in terms of potential escalation, I go back to what I said earlier in terms of a key focus for this department and the U.S. government writ large is on working with partners in the region, to include Israel, to prevent the conflict between Israel and Hamas from spiraling into a wider conflict. And that includes the tensions along the Israel-Lebanon border.
More international news. At least 1 person has died and 5 injured after Russia struck southeastern Ukraine. Russian forces have also fired at least 4 missiles at an energy infrastructure in the northeastern region of Ukraine, disrupting supplies for over 280,000 people in the region. Ukraine has said that its air force has shot down 34 of 51 Russian drones that were targeting 5 regions of the country. Meanwhile, Russia has also claimed that it has stopped new attempts made by Ukraine to push through its border into the Kursk region. And Prime Minister Narendra Modi will be visiting the United States later this week. PM Modi is scheduled to attend the 4th Quad Leaders Summit and will have bilateral discussions on the sidelines. Further, Prime Minister is also expected to address the United Nations General Assembly in New York. Meanwhile, Republican presidential candidate Donald Trump has said that he will be meeting Prime Minister Modi during his U.S. visit. While addressing a rally, Trump described Modi as a fantastic man and also labeled India at the same time a very big abuser in trade ties.
So when India, which is a very big abuser, he happens to be coming to meet me next week, and Modi, he's fantastic. I mean, fantastic man. A lot of these leaders are fantastic. You have to understand one thing. They're 100%. These people are the sharpest people. They're not a little bit backward. They are at the top. You know the expression, they're at the top of their game, and they use it against us. But India is very tough.
Zee Entertainment has said it will strongly contest all the claims made by Star India for nearly 8,000 crore rupees in damages. The company also called Star's claims unfounded and added that the arbitration was an initial stage. This move comes after Star India filed a statement of case before London Court of International Arbitration seeking damages over sharing of TV broadcast rights of ICC cricket matches. And shares of Reliance Infrastructure hit upper circuit today after the company announced that it has pared down its debt by 88% to 475 crore rupees. In an exchange filing, the company has said that Invent ARC, a lender to the Reliance Infra, has innovated certain charges, securities to recover its dues. And Amazon has named Samir Kumar as the country manager for India. Along with managing India, he will continue to lead Amazon's consumer business in Middle East, South Africa and Turkey. This comes after Manish Tiwari put down his papers in August to pursue opportunities outside of the company. Tiwari was leading Amazon India for the last 8 years. And the Union Cabinet has approved the proposals tabled by a high-level committee led by former President Ramnath Kovind on simultaneous elections. Union Minister Vaishnav, while making this announcement, said that the government will form a panel to implement these reforms, which was one of the BJP's top manifesto promises. Vaishnav said that the government will aim to build a consensus over the next few months.
सभी जो दूसरे जितने भी फेडरेशंस ग्रुप्स हर एक तरह के जो सोशल ग्रुप्स हैं उन सब का हम आह्वान करते हैं कि आप सभी इस पॉइंट को डिटेल में डिस्कस कीजिए, साइंटिफिक वे में डिस्कस कीजिए, कैसे वन नेशन वन इलेक्शन से इकोनॉमी को फायदा होगा, कैसे लॉ एंड ऑर्डर को फायदा होगा, कैसे देश की प्रगति बढ़ेगी, कैसे देश का डेवलपमेंट बढ़ेगा, कैसे ब्लैक मनी का संचार कम होगा, कैसे कितने मल्टीपल इसके जो इम्पैक्ट्स हैं उन सब के ऊपर डिस्कशन करें और एक इम्प्लीमेंटेशन ग्रुप उसके बाद में क्रिएट किया जाएगा जिससे जो लीगल प्रोसेसेस हैं उन प्रोसेसेस से इसको इम्प्लीमेंट करेंगे।
ये देखिए, ये प्रैक्टिकल नहीं है और ये चलने वाला नहीं है। ये सिर्फ चुनाव जब आते कोई ना कोई कुछ मुद्दा नहीं मिल रहा उनको, ऐसी चीजें बात करने के लिए, इश्यू को डाइवर्ट करने के लिए वो बात करते हैं और इसीलिए और पूरे देश के लोग कोई मानने वाले भी नहीं हैं।
को कैबिनेट की मंजूरी एक स्वागत योग्य निर्णय है। बार बार जो थोपे जा रहे थे चुनाव, उससे देश को निजात मिल पाएगा और राजकीय कोष पर जो ये भार था वो काफी हद तक कम हो सकेगा। योजनाओं की निरंतरता बनी रहेगी, नीतियां बदस्तूर जारी रहेंगी, पारदर्शिता बढ़ेगी और लोग मतदान केंद्रों में बड़ी संख्या में आ सकें।
Well, joining us now for more on this is my colleague Parikshit Luthra. Parikshit, a big step taken today, a big announcement coming in from Ashwini Vaishnav announcing the government's agenda about holding simultaneous elections. We heard some of the opposition leaders clearly not impressed with this idea. How is the government seeking to implement it? How is the government seeking to go about this initiative?
Well, over the last few days, there had been speculation and certain ministers had also gone on record to say that this government will implement one nation, one election within the term of NDA 3.0. And now here you have the Union Minister for Information and Broadcasting, Ashwini Vaishnav, after the cabinet briefing, making it very clear that the recommendations of the high-level committee by former President Ramnath Kovind have been accepted vis-a-vis one nation, one election. So this is what they've essentially said, that we will now have one nation, one election in two phases. In the first phase, the government will try to have simultaneous elections to Lok Sabha and state assemblies. And in the second phase, that is 100 days after the general elections, you will have simultaneous elections to municipalities and panchayats in the country. Now, all of this would require legislative and constitutional amendments, which had also been recommended in the 18,000-page report by the Ramnath Kovind-led committee. Now, what the government will have to do now, and what Ashwini Vaishnav has also indicated, that they will try and move ahead with consensus. They will try to take states on board because they will need the support of states to implement this at a pan-India level Also, you will need to have a common electoral roll to ensure simultaneous elections. There again, you will need amendments, the support and ratification by state governments. You will need all state electoral bodies to be on board. And this also needs a massive law and order exercise to ensure that adequate security preparations are made. You have adequate security personnel placed for such a massive exercise. How is the government justifying this? The government is justifying this on the basis of the Ramnath Kovind's report, saying that this is needed for higher growth of the country. Constant elections hamper the working of a democracy and decision making, and that's why this will be good for the country's finances as well. Let's see what happens. We're seeing some very sharp opposition from the Congress party, the TMC, the left. Let's see how the government's move towards building consensus on this takes place and takes shape over the coming weeks.
Right, Pariksha, thanks a lot for that. A big announcement coming out of the cabinet. But speaking of the cabinet, it has also provided a big fillip to space exploration. It has approved expansion of Chandrayaan-4 moon mission and setting up an Indian space station. It has also approved the Venus orbiter mission and cleared 8,200 crore rupees to develop a new reusable launch vehicle.
So if you have to send man right now, we can't do that. We need to go step by step. So that is primarily the Chandrayaan-4 mission goal. Now you talked about the Bharati Antariksha Station. Yes, there is a definite timeline. The goal given to us by Honorable Prime Minister is that we must have a full-fledged station by 2035. So our plan here is to launch the first module of the Bharati Antariksha Station called BAS-1 by 2028.
Well, time now for a short break, but coming up, 50% voter turnout in Jammu and Kashmir till 3 p.m. as 24 seats go to elections in phase 1 of the assembly polls. Details when we come back.
Overall, while you look at inflation, if you disaggregate it, I think food inflation is significantly higher. So from that perspective, I think there is still a little bit of pressure, which I would think when the crop season comes out, we should start seeing it easing up a bit. That's number one. Number two, there is a trend, however, that rural was significantly lagging urban. I think rural is starting to catch up with urban right now.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV 18, now streaming live 24/7 on YouTube.
Other big priority for us as a company is to make sure that we bolt on Capital Foods and Organic India are two acquisitions. Last quarter, Capital Foods grew 9, Organic India was -2. Directionally, we're in the right ballpark. We finished the integrations. Now the engines of distribution, innovation, marketing, as they start firing, and we are seeing growth trend in the right direction.
Barely a few months ago, this spot was bustling with shoppers, and your shopping experience was incomplete without being shoved, jostled around, or stepped on at least a few times. Ranganathan Street has long been the heart of Chennai's retail capital, T. Nagar. But this neighborhood is hardly recognizable anymore. The transformation started soon after tunneling work for phase 2 of the Chennai Metro Rail began earlier this year. It's the smaller retailers who have taken the bigger hit. In nearby Badaparni, 3 metro stations are being built on the arterial Arcot Road. Hardware, textile and electrical stores in these neighborhoods say their footfalls have come to a grinding halt, and some fear the losses they're suffering may spell the end of their businesses.
We have incurred losses of 50% since the metro rail construction began, and these roads were turned into one-ways since customer footfalls have dropped drastically.
I make just enough to pay rent and meet household expenses. Business has been gravely impacted since metro rail construction began.
I have faced losses of at least 3 to 4 lakh per month. I am unable to repay loans and my debt is piling up.
High street stores have also taken
investing.
Welcome back. You're watching Business 360. A decade-long wait for Jammu and Kashmir is finally over. The first phase of elections has begun and the voter turnout as of 3 p.m. had crossed the 50% mark. As many as 219 candidates, including 90 independents, are in the fray. Ishan Wani has this ground report.
Jammu and Kashmir is witnessing its first polls after the abolition of Article 370, and these polls are taking place after a gap of 10 years. Last polls were seen in 2014 when the assembly election took place, but later on in 2017, BJP and PDP government fell, which resulted in direct rule of the centre. Then after that, we have seen now elections taking place. In between, there was abolition of Article 370 and J&K was divided into 2 union territories. The key competition this time is between the National Conference and Congress combined versus the PDP, BJP and several other political parties were floated following the abolition of Article 370. Now, there's a twist to the story. That jail engineer from the Baramulla has come out of the jail, who has been accused of being a proxy of the BJP by the mainstream regional political parties. Though he has been making rallies in parts of North and South Kashmir where people are drawn in numbers, he's expected to create an impact in these elections as well, like he upset Umar Abdullah during the recently held Lok Sabha elections. But one more interesting fact about these elections is the Jamaat-e-Islami. The Jamaat-e-Islami, which is a socio-political organization, was banned by the centre in 2019, and this is for the first time since 1987 they have chosen to contest any elections. Now, there are certain critics which have said that the Jamaat-e-Islami used to call them haram, prohibiting them, but now these elections for them have become halal, which means that it is good to go. Now, there's an interesting battle that is taking place in the first phase where 23 lakh plus voters are deciding the fate of 219 candidates who are in fray for today. With Bashir Lone in Bijbehara, Ishan Wani for CNBC TV 18.
Lenovo has announced plans to manufacture AI-enabled graphics processing units from its Puducherry facility. The company is planning to serve both the local markets as well as global markets from this Puducherry facility. Ritu Singh caught up with Lenovo's APAC president Amar Babu on the expansion plan.
So the 50,000 enterprise class servers that we would be manufacturing would be for use mostly in India. Okay. The 2,400 GPU servers we'll be exporting as well. So we are building end-to-end capabilities at the moment. Okay. So obviously that requires upgrades. We are upgrading. We are looking at enhancing our lines, our technology. We are making significant investments also in building additional areas. So it's going to be a big step, a leap in terms of the capability and the infrastructure in the center.
Over time, how much of this will be for the local market alone and how much will be for your global centers?
No, so we expect a good part, 60% of our GPU AI servers will be for exports.
You're one of the big beneficiaries, of course, of the PLI scheme for IT hardware. But given the recent developments last year, there was talks of the government looking to ban the import of certain, IT hardware. That was reversed and relaxed later. In terms of ease of doing business as a player that's been functioning in India, that's looking to manufacture in India, what do you make of the current business environment?
So I think we've made tremendous progress in our own manufacturing. Today, we not just manufacture our Motorola phones under PLI 1.0 for the country, we export our phones as well. We also have signed up for the PLI 2.0, and we're in the process of setting up the ramping up the capability so that we'll start manufacturing. And these are all very attractive programs for the industry. And that's why we as a global player have taken advantage of it, leveraged it, and we are seeing good scaling. So, of course, the government did come up with certain processes. We've been following the process. It's been reasonably smooth. We haven't had any surprises to that effect.
And before we wrap, a CNBC TV 18 news break confirmed gaming platform Nazara Tech has announced plans to raise up to 900 crore rupees. The company has been on an acquisition spree of late. Rachna Dhanrajani, who broke that story, is joining us now for more. Rachna, how exactly does Nazara plan on using these proceeds?
Right, Ashmita, as you said, it is a CNBC TV 18 news break confirmed. We had earlier reported that Nazara is looking to raise funds via a preferential issue, and one of the deals that they're going to deploy this capital towards is the recent Pokerbazi transaction. Now, Nazara has been on an M&A spree, and the latest one being the Pokerbazi transaction, which was close to 900 crore rupees. And a part of this fundraise will be used towards making payment for that transaction. But apart from that, the company is looking to focus on its foraying into the publishing business as well as getting in the offline entertainment sector of gaming. Speaking of the offline entertainment gaming sector, it was just last month that Nazara received an LOI from the Committee of Creditors of Smash Entertainment, which is a Sachin Tendulkar backed company going through bankruptcy proceedings. So the first major acquisition that we could see with this newly raised capital would be towards Smash Entertainment, and further the company plans to foray into the publishing business, which is also expected to come into the light by the end of this year.
Right, Rachna, thanks a lot for those details. But that's all the time that we have. It's a wrap on this edition of Business 360. More news and updates will continue right here on CNBC TV 18.
Shopkeepers say the pain has been compounded by the fact that the months running up to this have seen tepid growth in sales volumes in key retail markets in the south. 3% in May, 5% in June and 2% in July. Experts say the absence of alternate infrastructure in Chennai has compounded the problem.
Unfortunately, in a city like Chennai, there are no alternative areas for customers to come in, park their cars or come in and access the stores. But my guess is that if the speeding up of infrastructure happens, which is the way it is done in the other cities, things can be much easier.
But speed may be hard to come by because some portions of the Chennai Metro Rail could run into delays on account of trouble with land acquisition and funding. The Tamil Nadu government has already decided to single-handedly bankroll the ongoing phase of the transit corridor in the absence of central sanctions. So the June 2026 target to complete the project has already been pushed to December 2026, and many residents feel further delays cannot be ruled out. In Chennai, Jude Sanath.
CNBC TV 18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC TV 18 weeknights at 7 p.m.
While overall we talked about tea being under a little bit of pressure, the premium and the mass premium continues to do well. It's the lower segments which are under pressure. 2/3 of my portfolio is now premium to mass premium, which is quite okay. In salt, value-added salt is growing at high double-digit versus base salt, which is still chugging along at single digit. So overall, that trend I think you will see for some time. And tea and salt, we've always guided for mid-single-digit volume plus couple of bips of this thing. And then the rest of the growth businesses earlier used to contribute to 20% of our portfolio, and we had guided for a 30% growth. We are now saying they will contribute to 30% of our portfolio and grow at 30%.
The market may have had a very topsy-turvy ride through this year en route to record high levels, but for the IPO market it has been smooth as a highway. Now that's because 57 IPOs have already closed for subscription so far this year. The number in all of 2023 was also 57, but the differentiating factor as of today is the fact that the IPOs of 2024 have raised more money than all of 2023 put together. Now according to this data from Prime Database, the IPOs of 2024 have so far raised almost 62,650 crore. That is well above the 49,400 crore that companies raised in the primary markets last year. Now this list includes IPOs that were open for subscription but have not listed yet as well. Now, September traditionally has been a good month for IPOs, and the 7 issues so far have already raked in over 9,000 crore rupees. But August has been the best month of
Let's talk money.
Hello and welcome to a brand new edition of Let's Talk Money with me, Surabhi Upadhyay. Now, if you track mutual fund headlines, you would have known that thematic funds are suddenly becoming very, very popular. There are lots of new fund offerings that are happening on this thematic instrument side. And in terms of the number of funds being launched and the money being collected, those numbers are really ballooning as well. In fact, if you look at data, industry-wide data over the past couple of months, then thematic funds as a category are pulling in anywhere between 10,000 crores to 15 to 16,000 crores on a monthly basis. So these funds are definitely becoming popular, but are they really worth your while? That is what we're going to discuss on the show today. And to help us wrap our heads around this subject, we have with us Feroz Aziz of Anand Rathi Private Wealth and Ruchit Mehta, Head of Research at SBI Mutual Fund. Gentlemen, great to have both of you with me in the studios. Thank you so much for coming through. Now, as someone who also maps that monthly mutual fund data, I know that every month when we look at the numbers and we look at the net equity inflow number, a large chunk of that is coming via thematic funds, right? And we're seeing funds in all kinds of categories. It could be defense, it could be manufacturing, it could be business cycle, it could be innovation. So we want to start by understanding what is behind this phenomena and how should we look at it as investors. So opening thoughts, Feroz.
Yes, Surabhi, you rightly have observed because you collect the data as microscopically as possible on a monthly basis. So it's obvious that you have got this trend absolutely right. If you have to try to infer why this happens, I would say there are 2 reasons. One is there is a limitation of how many diversified funds one AMC can launch. Then once you've already put all your bouquet in place and you actually want to bring in two, 3 more flowers into your bouquet and there's hardly any place, then thematic is a fallback option for an asset management company. But can't be said this as true for all asset management companies. Some asset management companies are using this as a great opportunity to create value. Because the theme identification is best done by the fund manager and research. You have a head of research, right? They are able to identify the themes much better than you and, not you, me and investors. That's a better thing to say. So when you're launching a theme and you're collecting new money at that point in time, that's a message that this is the theme which is good at this point in time. So I would always look at thematic schemes as coming from very credible AMCs as a great identification of a theme which is going to have a run. Now let's assume. If you look at HDFC, it's the second largest AMCs. Of course, SBI is the largest AMC. They launched a defense fund at the right time. And that became the 83% return over the last 1 year. And they also...
83% return, 1-year return on the HDFC defense fund.
Defense fund.
Timing. It's all about timing, right?
Yeah, the timing not coming into equity, timing of the theme. And why I respect this fund little more is they stopped accepting money too at a point in time. That's why.
So right now they're not accepting money.
In lump sum, they're not.
Okay, I think that's bringing me straight away to the next set of questions. And there's so many that, while it's very natural to want to invest into a particular theme, what are the do's and don'ts around it? What should we bear in mind? And Ruchit, comment on this. I mean, the fact that some of these funds are being launched because, like Feroz mentioned, that, this is the only place where an asset manager can really innovate and come out with new offerings. While that's one, as investors, I think we want to be in thematic funds where there's a real case of, real merit, a real long-term story that's yet to play out. So how should we approach it?
So firstly, I think it's important that the investor looks at the individual theme and understands what are the business prospects of the theme, right? Because not every theme or every sector will do well at all points in time, right? Then it just makes a case for diversified funds. The idea is to say that, okay, at this point in time, if the particular sector looks attractive, like, when we launched our energy opportunities funds earlier part of this year, it was something for us to say that, look, this is a sector or this is a theme that we think is quite interesting at this point in time because valuations are in your favor, earnings growth is looking to be pretty attractive, relatively under-owned as a sector. So this is a right time to probably get into that theme itself. So one will have to spend time to research the theme. Now, a good place to understand whether a theme is interesting or attractive is to say that you take some of the maybe the top AMCs, look at the frontline diversified funds, and see what are the overweighting or underweighting, right? So if generally you're seeing that some of the good fund managers in, let's say, large cap or larger mid cap funds are overweighting, hypothetically, let's say, the automotive sector, then it seems that there is improved business prospects for the automotive sector. So that could be another way to kind of, say, select a particular theme. And lastly, I think, always speak to an advisor. I think, your advisors will always be able to guide you better because they in turn do speak a lot more to the AMCs directly. They do interact with fund managers. People like them will always be able to give you better insights into what is a particular theme to look at this point in time. So those are the broad 3 areas I would say when choosing a thematic fund.
Fair point, absolutely. And since I think selecting the theme is such an important part of the whole decision of getting into a thematic fund, let's spend some more time on this. And Feroz, here the risk is real, right? Because when sectors are hot or are in demand, PSUs, you mentioned defense, it could be manufacturing, it could be, tomorrow it could be EV. So a lot of times styles and themes become sort of in vogue and become really hot. And that's when we do see a lot of funds come in. So how do you sort of guard against, while you don't want to miss the bus, but you don't want to be behind the curve, you don't want to get burnt also, but you want the upside. So how do we navigate it?
See, one thing very contrary to what I say when it comes to normal open-ended fund investing, saying never buy an IPO or an NFO in this case, right? For earlier they used to be called IPOs. New fund offers, you never buy a new fund offer for a diversified large cap scheme or a mid cap scheme or even a small cap scheme. So point one I'm making is when you're trying to take a thematic fund, an IPO is a great message. So, or an NFO is a great time to look at that theme. Okay, don't buy open-ended thematic funds as much. Okay. But you can definitely, like, consumption has been a theme. Manufacturing has been a theme. If you see 3 great AMCs launching that theme, that implies that all 3 AMCs concur on that theme being undervalued today, like energy, aapne kaha, right? I don't think energy was so popular. Yeah. But still, SBI kind of an AMC is having the courage to launch and uses infrastructure to collect money at the right time.
Because energy is, frankly, right now in the market is not sort of a theme or a sector that's in vogue. It's not hot right now. So therefore, this one is an interesting launch. But again, I go back to the question, what about the themes which are running hard, PSU, manufacturing, and then how do you decide whether a thematic fund is right for you in these themes or not?
Basically, that's the warning signal which I'm giving to all the viewers, that if you're hearing a larger decibel on a certain theme, that's exactly the time to sell that theme more so than buy it, right? So, like energy was not as popular. Defense back then was not so popular. So that's one thing which I'm saying. An NFO from a large AMC is a good message that this is a theme. You might not have heard it as many times, but it's a great theme to actually go with NFOs in thematic category and not buy too many themes which are already existing.
Sure. Okay. So one sort of the first step is to identify the right theme. The next question to ask is how much exposure should I take to that theme? And Ruchit, what's the advice over here? How to blend such a fund into the portfolio?
I think we've always told our investors that, look, if you're going to invest into a thematic fund, one is that at a principal level, when you're buying a thematic fund, you are increasing your allocation to that theme, right? Because let's say you have a bouquet of diversified funds in a portfolio and you add, let's say, an automotive fund, right? Or an innovation fund.
Technology fund or any fund.
You're increasing your allocation to that sector or that theme. Therefore, to be more prudent, thematic funds ideally should not be more than 15-20% of your overall asset allocation, right? Okay. Within that, ideally, it's not that you buy a bunch of themes, because then you are sort of mitigating the whole purpose of buying a thematic fund. Okay, buy 1 or 2, maybe 3 at best. Okay, and by doing so, you will increase your allocation to that particular sector theme that you want. So, let's say you put 20% into thematics, maybe buy an energy fund, maybe buy an automotive fund if you like these sectors, and buy maybe not more than 10% of your portfolio in one particular theme or thematic fund. So that's the broad
that's an approach that could be followed. Also, Feroz, is important, right? Because like Ruchit also mentioned, sectoral funds and thematic funds. And sometimes these terms are used interchangeably. But highlight for us the small nuances, the differences between the overall category of sector funds and thematic funds, which may involve more than one sector.
Yes, actually, it's such a customized space. Even in themes, there are such diversified themes or concentrated themes. Like SBI Infrastructure is a part of my model portfolio.
Okay.
Let me illustrate it with this. SBI Infrastructure has so many sectors that I'm not too worried that it is still called a thematic scheme, because it has everything other than pharma and IT. But it's still called infrastructure, right? Because financial services is infrastructure, financial infrastructure of the country. So you will have to look at, but manufacturing is a little more narrower.
Yeah.
Right? Business cycle is a little more wider. So whenever it comes to thematic, cannot be top down, it has to be bottom up. Which scheme are we speaking about?
Sure.
Now coming to your pointed question, sector is very, very narrow. Right? So if you're buying a banking and financial services sector, 90% of the money, 80% of the money is going to be in that specific sector. Now there are 12 funds in the thematic category who have greater than 50% of their money in one sector. Now these 12 may be as close to a sector fund than a thematic fund.
Okay.
There are 26 funds who have in their largest sector anywhere between 30 to 50%.
Okay.
So these 38 funds, I would call them as narrower themes, higher on risk.
So you would prefer to be in a more diversified thematic fund than in a very narrow fund, which is then it becomes like a sector fund.
Absolutely.
That's the approach.
Yes.
Got it. Okay. We need to take a very quick break on that note. On the other side, our viewers have also sent in some questions on thematics, and we will get to answering those queries in just a moment.
Let's talk money.
In terms of funds raised, as over 17,000 crore rupees have been raised by 10 IPOs that month. Now, how have these IPOs fared? Now, 5 of these issues have returned 100% and more from their IPO price. Now, 30 of them have gained anywhere between 25% to 99%, and only 7 such IPOs are currently trading below their IPO price. It shows you the kind of market that we have been in. Now, unlike 2021 and 2022, there have been no giant-sized IPOs this year. While 2021 had Paytm, which looked to raise over 18,000 crore, LIC surpassed that in 22 with a 21,000 crore issue. Now, Bajaj Housing Finance, which has now become the talk of the town for the bids it received, is the largest IPO of the year with around 6,500 crores, followed by names like Ola Electric, Bharti Hexacom, and of course Brainbees. Now, 45 IPOs this year have delivered positive returns to shareholders. Now, among them, Jyoti CNC is the top performer, with the stock more than tripling from its IPO price. The recent listings like Unicommerce and Premier Energies also find a mention, considering the strong moves they have seen just a few days after they listed. Now, among the few IPOs that have delivered negative returns so far include Capital Small Finance Bank, Popular Vehicles, among other such names. However, none of these names have any substantial downside from their IPO price, such as a 50% or more from their IPO price. It's been a big year already for IPOs, and we still have 3.5 months left. Now, at this pace, it will not be a surprise if by the end of the year, we end up doing a story saying IPOs have raised 1 lakh crore so far this year.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC TV 18 and CNBCTV18.com.
Let's talk money.
Welcome back. So this week we are discussing thematic funds and whether these theme-specific concepts, whether they make sense for your portfolio or not. So we have a question coming in from one of our viewers, Siddharth. He's written in to us on one of the social media platforms, and he's saying, I want to invest in a thematic fund, but I'm unsure of how to choose one and where to begin. I think very simple, very basic question. It's exactly what we're trying to understand and answer, Siddharth. So, Ruchit, what would you say? What should be the starting point? You said that the exposure to any such theme should not be more than 15% of the portfolio.
Thematics as an aggregate should not be more than 20% of your total investment. And within that, not a single fund should be more than 10%. Or single fund stroke single theme. It shouldn't be more than 10%. So that's the broad thumb rule, I would say. So.
And what are the questions that you'd ask before deciding and checking yes on a fund?
So one is I would want to see whether the particular fund, whether it's an active fund or a passive fund. Okay. Second is between the active funds, is this more of a well-diversified fund? Because one of the more interesting aspects of a thematic fund is, and this kind of gets missed out, is that why actually choose a thematic fund? If you like a particular sector, you can say, oh, but my fund manager already has overweighted the sector.
Yeah.
Perhaps. But what happens is that when you're overweighting, right, you still buy a very limited number of stocks. A typical portfolio is, say, 50 to 60 stocks. If I'm buying a particular sector, I may have 4 or 5 stocks, or maybe 7 or 8. Bulk of them, maybe 50% more, could be large capish or mid capish. You don't get an ability to play a diversified set of stocks. In a thematic fund, typically an actively managed thematic fund will have 20, 25 odd stocks, right? And it gives you a wide basket of stocks to kind of invest in. Like our energy fund, right? We're the same thing. It is not just your traditional large cap names, but there are 25, 30 stocks. Some of them we could have never invested or never looked at because we didn't have the capacity to invest. Now we have a thematic fund where we can invest in some of these securities. So look at that, whether it's an actively managed, A, B, is it a very well diversified fund or not? C is also, again, talk to your advisor, try and get an understanding that is this a theme that's likely to play out from a 3, 5, 7 year standpoint, and based on your risk appetite, you can choose a particular fund that suits your need.
Fair enough. Feroz, you want to add to that? Things to keep in mind?
Things to keep in mind is one, definitely that how old is that theme? Like infrastructure. People, like he said that, Ruchit Saab said that you can't have more than 10%. Into one specific theme because you have to consider risks. This is the biggest anomaly or biggest problem which happened in 2008. Diversified fund had gone 50-60% in infrastructure. Clients got so attracted and bought 30% more of infrastructure. I have seen a portfolio which had 92% infrastructure. And then 2008 happened. And you saw drops of 70% in that portfolio. Right? And Nifty fell 40-50%, but this infrastructure fell 70-80%. So point is, don't go very heavy. Don't go to a very old, popular theme. Now,